I finally got it. Hey, can you hear me okay? Hold on. Let's see here. Toggle. Top chat. Live chat. All messages are visible. Can you hear me okay? Hopefully so. Yep, 10 minutes. Okay, good. How's the background music? Kind of, I don't want to turn it too loud there. Okay. All right, all right, all right. So, yep, 9 minutes, 10 minutes. Oh, yeah. Ah, old Tesla, huh? Okay. So, let's, I'm gonna temporarily kind of, yep. Got that up on the screen. Fed press count. Okay, I don't need to see that. Oops. Yep, yep, yep. I think it's what's going to matter is also the projection. If they changed it, right? If they increased it, if they that's what's going to matter more because everyone is already expecting the 50 basis point hike. 175 by Friday possible. What's Tesla currently? I don't follow Tesla. Let's have a look here. Old Tesla. Man, I'm glad I finally got the streaming to work. Good, good, good. Let's see. Stream bitrate 4500. Stream settings. It's giving me a message about streaming bit rates. But okay. As long as you can see my screen clearly and I sound clearly, I'll just run with it. I won't tinker. I'll be messing around with it. 469 is a flag target. Starts talking me might push higher, but I'm suspicious of it holding. It, you know, once we get the number and stuff like that, if it's going to hold, here, let me just move this down. It's going to depend on here, this. We need to watch MACD, the RSI across these different time frames. That will give you a real good idea if it's going to hold. You know what I mean? If the RSI stays up there and not start going down and down and down, right? That what we're looking for is no bearish divergence. That's how you know if it's going to hold. That's the key. I want so we can focus on trading. Is it like really loud? Because I can't tell from my perspective. Yeah, we can definitely do that. Plus, I want to listen to that press conference. I got turn on CNBC. I just want to hear what they have to say. You know, because they got commentators. Johnny on the spot. Because I'm not going to have time to just read stuff. So they'll be on it like a dog with a bone. Sold hard yesterday. Yes. Let's see about Friday. Is there an big economic report coming out? Let's have a look at Friday, right? I mean, it totally depends on today, right? The numbers, what Powell says. Oh boy, it looks bullish right now though. Let's see, Thursday. Oh, this retail sales. Friday. Wait a second. Yeah, Friday there isn't anything like super important. Global manufacturing. Yeah, nothing that's highlighted as deal breakers. Yeah, let's see here. Here we go. Still don't trust the huge CPI gap from 375. Oh, you're talking about that was back over a month ago. I know what you're talking about. Yeah, that was on 11/10, right? Yeah. So, you know, there's two ways to look at that CPI gap on 11/10. We're either going to fill it this week, or we're going to fill it when we crash from the rally. Because, right? I mean, we haven't gone back to it since 11/10, so it's been over a month, right? So it doesn't necessarily have to be today. So there's a couple ways to look at it. Pretty heavy above the dump yesterday. I think 420 is the potential. If it's gonna surge, I think it's going for 420. That was that gap that I saw back in like the third week of August. It left a gap there. So it's almost. Let's see. Now keep this up. I mean, in 2 minutes. So what I'm going to do instead, let me turn on CNBC, see what they got to say about all this. Turn that on, listen to it. I'd rather listen to them. Hold on. Turn it on my phone. I'm telling you, I'm not seeing exchange.
And the Fed is very happy to finally be more forward-looking. And so I think CPI yesterday and also the month before, it's going to allow them to be more forward-looking.
Let's see. So I got CNBC on.
I think that's generally a very positive thing.
In the background now.
CPI yesterday is after today's hike, it'll be the case that the policy rate will likely be higher than the run rate for core inflation. That's the first time all year that's been true. And I think the Fed is going to look at that and have a little bit more confidence that policy is restrictive. You know, CPI may still be too high, although I think that's debatable. But with a policy rate that's now higher than the run rate of
higher than projected.
it becomes just a matter of time before
Well,
inflation
hello.
starts to come down. I think that's another big
Welcome,
development. So
Tracy, TC. I've been chatting with James Bond here. Fed decision imminent. I've got CNBC on in the background right now. I want to hear their commentary. Oh boy. So here's Uh-oh. Oh, come on, come on, come on. Oh, boy.
Not really. I think people priced in 50 basis points. I think the dot plot will go up 25 basis
What's
points.
going
This is the
on?
terminal rate of
You guys
4.75
seeing
for
the screen right
5%.
now?
I think Jay Powell will actually smile during his press conference because there is better news on inflation. I think he'll have to admit it. That opens the window a little wider for soft landing. But
Come
I think
on,
this is.
come on.
I think we're in a good place here, and I think market expectations and the Fed's view are converging here. And I think that's positive. All right, there's
The
the 10-year
projections are
Treasury
higher.
5.1%. Let's call it ahead of the Fed decision. With WTI oil at 2.5%, the
Oh,
S&P
come
is
on.
above 0.75%. Let's get to Steve Leisman with the Fed decisions. The Federal Reserve raising interest rates
Talking
by 50
minutes.
basis points to a new range of 4.25 to 4.5% as expected. The Fed saying ongoing rate hikes will be appropriate.
Just watch this,
Also
guys.
raising the 2023 median forecast of Fed officials went up to 5.1%. It had been at 4.6%. This is higher than market expectations for a peak funds rate. It is, by the way, right in line with the Fed survey at
Right,
5.15.
5-1 versus 4-6.
17 of the 19 officials are now above 5% in their forecast for the 2023 funds rate. None were above 5 in the September forecast. 7 officials had
Come
gotten to
on.
540, and there's one person who's at 563 for all the way through 2025. The funds rate then see going down to 4.1% in 2024,
Yeah, 50 basis
3%
points was
in
normal.
2025, with a long run rate eventually being reached of 2.5%. The Fed repeats it will take account of the cumulative effect of rate
Hold on a
hikes
second.
and lags in setting policy. This is again from the statement. It will continue to reduce the balance sheet by 95 billion a month. It says growth has been modest, inflation elevated, unemployment low, and job gains robust. So it still sees that tight job market out there. It raised the GDP this year to 0.5 from 0.2. That's because of the strength we've seen in the fourth quarter, but it lowered it to just a half a point for next year from 1.2. Ratcheted
Ooh,
up
that is not
the
looking
unemployment
good.
rate to 4.6 from 4.4 for next year. Stays there for 2 years, by the way. And it sees inflation gradually declining to 2% by 2025. So 50 basis points, Kelly, but pretty hawkish when it comes to the outlook. And good unanimity, by the way. That was
Oh
the statement.
boy, look
The
at that.
policy decision was unanimous. Good unanimity also, at least by the board right now, on where rates are headed, and that is above 5%. Hawkish, Steve, is the conclusion from markets where we've seen stocks lose all of their gains, in some cases turn negative, and today you're still down
400.
about 3.5 basis points. Again, this is the first reaction. It's going to be a long afternoon. We have maybe 2 hours until we're done hearing from Powell. That said, what's the most hawkish thing about this to you? Is it those rate hike projections, the dots as we call them, especially into next year in 2024? So there's a discussion
Listening
that
to
I think
the,
we can
the
have,
broadcast
Kelly,
now.
maybe in one of your regular terrific 1 o'clock shows, not the special, about whether the Fed is now using the dots as more of a policy tool. Um, and I think the Fed sending a message here that while the market has taken all this very dovishly, loosened up financial conditions, that part of
Hold
this is
on
a
a
message,
second.
hey, we're going above 5%. We intend to be very tough here when it comes to inflation. So that 5.1%, not just by itself, but the number of people, the change from the September survey, none of them were above 5% before, and many of them
Are you
now,
guys able to hear the
what did I say here? 17
CNBC
officials
in the
now,
background?
7 officials are at 540 or higher. So there was a pretty hawkish, sizably hawkish contingent on the
Could
Fed.
reverse
That
higher.
sure sounds like the consensus
Yeah,
seems
I'm
to be
watching.
changing around that, Steve. All right, so stick around.
I mean, the
Pete,
VIX.
we're going to talk with you a lot more, I'm sure, about this. Let's bring in our panel as well. Again, we've got a lot of folks out there, and let's bring in and introduce Bob Pisani as well. Also, Rick Santelli joins the conversation. So this group, as you can see in front of you here, has a lot of expertise, and maybe we'll send it out to Rick first with some of the reaction
Okay.
on the
Yeah, that's
interest
okay.
rate and macro side of
No,
things. It
I'm
was
watching.
for sure, Rick. It was definitely movement in the marketplace, but it was
I'm watching
nothing
this
that
wick.
was I would characterize as being unexpected or out of the ordinary. Markets did move, but not by a whole heck of a lot. No, and when you set the table for interest rates, to give some context, they have been moving rather dramatically lower considering the Fed's path. And
See,
today we see
I
the
guess what
Dow
where I'm thinking right now is
up towards 426.
that's the
The futures
projection the
are
Fed
back
is
up.
making.
They're a little more sticky than tense.
But
The
does the
Dow
market
rates went above
believe
355, came back
that
down.
number?
These are not huge moves, and in the context of the fact that
We
we're
rally
already
into
near
close
350 after having a
for
former
Tesla.
high yield
Gotcha.
for 10s or 470 high yield close for 2 year. And now we're
So,
right at what? 422, 423. These rates are
okay, so
low.
now we
And
know
when
the
you look
number.
at that plats and how far out they're predicting inflation is going to be stubborn, something isn't squaring here. And it's going to be interesting to hear the Q&A because the markets have definitely become very opinionated and investors are pushing back more in the
Okay, hold on a
treasuries
second.
than
I'm
they
just
are in equities. Yes, the equity market
there,
reaction was down, but it wasn't yield.
there.
And if you look at the spreads, twos to tens inverted is several basis points more, and the
All right,
dollar
just hold.
index improved a bit.
We gotta let this
Right
play
now,
out a little bit.
the dollar
Gotta let
index
it play out.
details are in the Q&A.
And we go to Bob Pisani for more on these stock moves that we're seeing. Bob, what do you
Oh
think?
yeah, sure.
Well, I think Dom's got it right. We were down about 300 points peak to
Just like
trough.
last time
The Fed's had
on
their
the
announcement
10th.
here.
Oh,
So
sorry,
we were
the
up
second,
4 pips
11-2,
essentially on the Dow.
when
So
he stepped to the mic.
the market has been looking
First, the
away
markets
from the
went up,
2100 on the
surged,
S&P. Why?
and then he
Because
stepped to the mic.
that
Markets went
broke
down.
the downtrend, this pattern of lower lows and lower highs we've had all year. But we've had a lot of resistance there. We failed several times. We had a strong PPI last week. We went to 3900. So the hope is that we
7.
can break out above 4100
Yeah, you
and
better hope
march
so,
on
man.
to
So
3900
right now,
because that seems to be where there's a lot of support.
here, let me get
And it
this
looks
out of
like
the way.
grinding around might be the thing to do at this point. The real problem here
Yeah,
is
see, it's
Wall Street is dramatically lowering the
on
earnings
the
estimates for
65-minute chart right here.
2023 because
It's waking up
inflation
from the
is the big
400.
22 story.
So
Recession is
we
the big
just need to let
23
this
story. What
play
side of
out.
the recession debate are you on? And most major strategists now anticipate flat to negative earnings, 0 to down 10%.
Just gotta let it
This is
play
the range
out.
of the estimates for strategists on Wall Street. The average is about down 5%. So
The
this is a
question.
problem. How do you
Ooh,
argue for higher stock prices from
look at
here
the
or
VIX right
during
there,
what
boy.
Wall Street thinks is going to be a fairly mild earnings recession? Let's put it this way: down 5% on earnings would
Let's
be a
see.
mild earnings
Let's just.
recession. Down 20% would be a harder landing in terms of recession. But how do you argue the S&P should be higher 6 months from now or even 8 months from now when you're potentially down 6 to 10% on earnings in 2023? That's a hard case to make right now. You have to argue for a multiple expansion, and Dom knows perfectly well that's a pretty thing to argue, pretty hard thing to argue
Come
in
on,
a
markets.
downward trending economic environment.
Bob, it's an excellent point and one
What
that
time is
been
it?
triggering some thought
107.
for maybe weeks now at this point is to see whether there is that kind of a breakout. This data, this Fed rate decision did not do anything to change anything from that trend standpoint. David Kelly, I'd like to bring you and the rest of the panel back into the discussion
Oh
here.
boy.
David, the markets are reacting, no doubt about it, and equities are softer. They've moved to the downside. We've seen rates spike higher, but it all in the context of where we've
Watching
been over the
this.
last several weeks seems as though the
65-minute.
markets were kind of anticipating this. What does this then say about the way that the landscape sets up for the early part of 2023 and whether the Fed will continue its rate hike campaign, albeit perhaps at a slower pace or for a little bit longer than it did, but with smaller increments?
Well, I think the market was anticipating something more dovish in the dots than we've got here, because if you look at the Fed funds futures market as of this morning, it was looking at a terminal rate between 475 and 5, not between 5 and 5 and a quarter. But what I think is really interesting is, in some ways, the Fed is more hawkish than that, because what they're saying is that
Hey,
by the
hello,
end of the
hello.
year, it'll
Blessings. We're
still be
just
between 5 and 5
all
and a quarter
quietly
in
watching
2023.
right now
And as of
the
this morning,
market's
futures
reaction
markets are
to
pricing in the idea
really
that the Fed
the
is already going
projected
to
year
drop
over
perhaps
year.
cut rates
Not
twice
so much
again
the 50
this year.
basis
So
point,
I
but
think there's
the
going to be
future
a big
projections.
argument here, sort of between the Fed and the markets, where the markets are saying you're overdoing it, you're going to put this economy into recession here, and that's why you're going to end up having to reverse course. So I do think I think this is a mistake. I think the Fed is trying to be hawkish to show how resolute they are against inflation, but inflation's fading
Oh, come
quickly,
on,
and
come
it's
on, come
not
on.
worth putting the economy into recession just to hit your inflation target. A year earlier than you thought you were going to. Inflation's coming down anyway, so I'm disappointed by this, but I think this is more hawkish than markets expected.
Although, John Bellows, let's remember how dovish the dots turned out to be coming into this
Let's
year and
see.
how wildly they underestimated the actual trajectory of inflation and rate hikes. So, could we live through an episode like that again, to David's point, where the Fed does come around to the markets? If anything, the dots are one of the most lagging indicators that we have.
Yeah, I think you're on a good point. There certainly is a little bit of a dissonance between the dots and the market, but the thing I would emphasize is that the degree of that is much smaller than it has been, and certainly much smaller than the volatility that we've realized in the market
Just watching. 65. Come on, markets. I mean, the question is, does the markets believe the projections? To me, that's what I'm thinking about, right? Because we just got two consecutive month-over-month decreases in inflation. So it's that's the question. The only thing saving the market right now is undercutting yesterday's lows, trap shorts, and squeezing into the close. But everyone is talking Santa Claus rally, which is why I don't trust it.
Markets are at session lows. The Nasdaq Composite is off almost 100 points. The S&P is down about 27, 28 handles. Call it
Dow Jones down,
so to speak.
yeah,
Checking it right now. Now about
negative 100,
so half of 1% declines. The Dow is now down 165,
140.
170 some points. Mona, this is a good time to bring you back into the conversation here as well. We started you off with kind of the macro picture and what the expectations were. The way that the markets are shaping up right now seems to indicate at
Oh,
least
CNBC.
that the initial part of
Can you
next
make out what
year
they're saying, or you
could
just
prove that
hear
you will
some
see bias to the downside, but maybe not as
gibberish?
volatilely so as it's been. If you
They're
stack
just
those
providing
up with everything
commentary.
that you've seen today from the Fed and the CPIs and the PPIs and everything else, does this then still mean that the path of least
Inflation
resistance
gradually
stops
declining to
is
2% by
upward? Do we test
2025.
the lows? Do we set new ones here in early 2023?
Yeah, it's a great point. And look, I think to John's point earlier, we are headed towards a 5% plus terminal rate according to
Come
Fed
on,
today's
markets,
dot
you
plot.
gotta hold.
And really, the market wasn't too far off of that. And so
I mean, I'm
5%
still watching
is
this
something
guy
that's probably too
because
far
I think
from
it's tracking to this
rate
one,
hikes.
65
The Fed
minute.
is giving itself some room in case inflation does become more
I'm still
volatile.
watching.
But I also agree with David that inflation is starting to show signs of rolling over, and there are several leading indicators that we follow that
Yep, good move on that one.
that inflation will probably continue to move in this downward direction.
Calls and puts.
Interestingly, I do think the Fed is being a bit
Oh,
conservative, so they've
see, are
got
we starting to see some
0.5%
green shoots?
for
Here's
the
some
early
green.
2023. I think there have been so many calls
I'm still
for
watching this
a
guy,
long time
65.
to the upside that now they want to be a little bit more cautious to the downside, and perhaps the same way they're giving themselves a little bit of room in the Fed funds rate. Now, to your point about do we
Right,
retest the
TC.
lows?
You
Certainly,
got
I
that
do
right.
think there's a period of volatility ahead of us as we get through not only an economics downgrade, but
See,
the earnings
the
downgrade
reason why I'm,
early on.
well, we'll see.
That being said, this is
I
where
just
we
wonder
are
if
in the
if
second
that's what the
year
markets are
of this
internalizing right now.
recession or this
The actual,
economic downturn, if
see,
you
here's the
will.
right here
No one is
in
that
lower right. You know, the actual projections.
not only Wall
Here,
Street,
let
but
me
a lot of people are talking about it already. We do think that if markets do enter a period
move
of
that out of the way
volatility,
there.
it could potentially be short-lived in that they will start
Right,
very quickly then
third year,
believing
first year,
that
second year,
there is
third
a
year.
recovery ahead. And keep in mind, when you do look at history, the analysis shows us that markets actually
You know,
start recovering
that's what they're
after about
projecting.
3 to
But
6 months
if you've been
of
watching the
recession.
news lately, this
And
past week,
normally
they're like
markets
the
would
markets are like,
continue in 2023.
I don't believe you
So
anymore.
I really
I don't
do think
believe
that
you're
this is
gonna
the fact
meet
that
that
this is a
projection,
more recovery
given
quarter.
what's
All right,
happening.
let's turn back and
Right,
get
that's what they're
back to the
saying.
moment as we start turning our
So,
attention to the Fed conference at 2:30. We hear from
see,
Rick
look.
himself. Rick, what will you be listening for?
So far, green. See that? I've been watching this one, as I've been saying. I'm watching it. I'm watching it. It's wicking up. So at this point, it's like, well, you say you want to do this. We might just be bottom out of here. That undercut yesterday's lows could be the short squeeze fuel. Yesterday's lows. Oh, you're talking about that would have been right here. Right there. Here, hold on. Let me do that and then get the screen back up there. Well, you guys already seen it anyways. Yesterday's low is 399.07. And today, 398.70. Boy, we got the 1 hour. This is the key. Come on, Marcus. What are you going to do? What are you going to do? Come on, markets. It's got to. So at this point, I have only the 5 minute and the 65 minute open. I'll just skip the 30 because I don't think it's tracking to the 30. It's tracking to the 65. Stream live all day, every day. Yeah. I don't know if my voice can handle something like that. Oh, come on. Come on, see? See, we're getting the green shoots. That's what I'm wondering. I'm like, do the markets, even though we got a higher than expected year over year projection, I think the markets don't believe it. They're like, no, they don't believe it. They don't believe Powell. They're like, you can say you're going to do this. That's fine, but you're not going to get there. That's what they think. We'll see, though. I don't want to. I'm not going to project. We'll see. So, okay, so you guys see VIX right here in the back. This is the 5 minute chart. So 400. Hold on. Four. Let me see the line. 423. Yeah. Let me draw that. 423. I'm drawing that red line. 23. Do that. This red line. Let me see how clunky my. Let's draw that. So 65 min EMA 50. Draw that in there. Let's just go 13. See what happens here. No, I don't want to do that. So far, so good, guys, but I don't want to.
So this one size fits all network upgrade is the best you guys can do?
Yeah. Just so you can be clear. See that? Okay. So you can see the VIX at the same time. CNBC on commercial break right now. Come on. Hold serve, buddy. Hold serve. Yeah, ask James about Tesla. He's I think that's like his secret passion. Tesla. Come on. Let me Did the dollar get a pop? Let me see. Hold on a second. I mean, dollar. I'm looking at DXF. It's not getting a pop. Right. 158. Oh, wait a second. Hold on. There's a no. 158. 2 p.m. So, just watching the VIX. Let's just see. We don't know. Yep, 50%. Thanks, Joey. Yeah, we got that. But what sent the markets down, Joey, is this bad boy right here. The first year, second year, third year projections are higher than what the markets expected. So, boy,
So you would have gone 75 here. That's interesting. I wonder what you make of the more forward-looking market
oh
indicators,
come on, markets.
TT inverted yield curves, especially the 10s ones, which has more or less a perfect track record. The fact that they've hiked now the Fed funds rate to well over where the rest of the curve really even is, except for at the very short term. Even something like prices for
Yeah,
the
yep. It was
ISM,
the
right? The data
projections
that's
that
collapsed
they didn't
to levels
expect.
consistent with 2% PCE inflation.
But with anything in in 10 minutes ish, here comes Mr. Powell. Let's see what he's got to say. See what he's got to say. Then we're going to get a reaction from the markets. So, since you're a new joiner, I'm obviously here's the 5 minute. Been watching that, but I'm also eyeing specifically the 65. Let's see if I can go ahead and zoom on in that one, just so it's bigger. Yeah, make it bigger. I think that's what it's trying to hold. This the 65-minute EMA 50 right here. I drew that line into the 5 minutes chart. That's why it's like right there. So, yep, speech in 9 minutes. You got it. You know what comes out of his mouth makes all the difference in the world too. So, come on. Yep, come on, man. I mean, look at that. I mean, look at this. It's just right there. Boy. 401 close. Oh, yeah. Yeah, we're below 401 right now.
Is there a case to be made? A lot of folks, economists, are talking about this idea that interest rate policy
Yeah,
has
you're
a
talking about
long
right
and
there.
variable lag. I've heard that term a lot now these days. Is there a case to be made that these days, this decade, that long and variable lag has become shorter? That we see policy impacts in as little as 3 to 6 to 9 months, as opposed to 18, like Kelly pointed out before.
Come on, markets. Keep showing the VIX. I think both VIX and SPY are holding right there at 400, waiting. Yep. Oh, yeah. 5 minute absolutely has to. It's got to. It's right exactly at the line. Yeah, J Powell's up in 5 minutes ish or so. Right. It needs to. Ooh. Come on, man. Watching the VIX also on the left. So as I was just see, as I was saying earlier, I think it's a game of bluff. What do the markets believe based on what Powell, in the press conference and the numbers and the numbers that we just saw, the year-over-year projections? Do the markets believe it? Because I'm seeing reports that, like the bond market doesn't believe it. The bond market, that's been going up. If you guys follow that, um, it's been going up. They don't believe that the Fed is going to be able to keep uh, hiking rates. Oh yeah, yeah, it's ugly. The MACD. It's it's trying to flatten out. It's trying to flatten out. That's what you have to do. You've got to try to flatten out and not just expect a V-shaped bounce. But let us see. Let us see. Man. Still at a commercial on CNBC. I mean, the Dow is down 112 points. Nasdaq down 73. SPY down 18. Oh, SPX. I mean, not SPY. SPX. Boy. Come on. I want to see them flatten out a little bit. Flatten out, buddy. Let's see what's going on over here. Up. Right, for Tesla, eh?
Without a doubt, Kelly. I mean, he can certainly acknowledge progress in various areas on inflation, those that he laid out not too long ago in that speech.
I mean, we're going to find out, guys. Oh, see what I'm saying? Look at that. I mean, it's right there. Exactly. Just listening to commentary.
So that combination is unsettling. If they think inflation is going to be even higher while growth slows down, unemployment has to go up into the mid fours, is what they're saying. And even with that, they're going to keep Fed funds above 5%. Now, all that is subject to the markets disagreeing with it and deciding to take the other side. And you've been pointing out, and I think it's in all investors' heads, that 1 year ago,
Play Powell live.
the Fed was very wide of the mark with what the outlook was going to be.
You mean trade? Yeah, I'm going to. That's my plan. See. So, it's a wait and see on this reading on the VIX. Let's just, boy, yeah. Okay, that went up. That was the big first spike up. It's oh. Just hang tight.
press conference, Mike?
I would say he's going to say we're not done. He's going to talk about higher for longer. And he did say, and see if he actually gives a nod to the CPI data we got yesterday and is willing to exclude the rent calculation.
Just depends.
Inflation expectations. In other words, to try and say maybe now finally it's time for a more nuanced view of inflation. Whereas earlier this year he said we can't do that.
Let's give a quick look at the market.
I'm just listening to the commentators.
The Nasdaq's down about 0.8%, as you can see right now. The Dow less than that, interestingly, down about 0.4%. And crude.
Yep, when he steps up there, it's really gonna fly.
Up about 2.5%. We saw a pop in bond yields, Dom, as well. Immediately after the decision came out, up about.
I mean, that's the projection.
On the 10-year, and there we still are, sitting right around this level.
Year-over-year projection. Depends on the questions that he's asked and his responses to it. Here we go.
Good afternoon. Before I go into the details of today's meeting,
Are you guys watching it too on your side? Are you listening to him?
that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy.
Come on.
We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't.
Just listening to Powell right now. He's in his typical intro paragraph that he's always said.
Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet.
Still not saying anything
Restoring price stability
specific.
will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
Listening to the charts, eh?
The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business.
He's just quoting stats right now.
As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year
man.
low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by
Oh, it's time to get your puts in, guys.
2,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market
It
continues
is time to get your puts
with
in.
demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year.
Hold on a second.
FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%, excluding the volatile
getting some push-up.
Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like
397.
housing and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point, bringing the target range to 4.25 to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation
Hold
to
on,
2% over time. Over the course of the year, financial conditions have tightened significantly in
look
response
at
to
it.
our
It's trying to
policy
push up.
actions. Financial conditions fluctuate in the short term in response to many factors, but it is
You
important
know,
that
though.
over time they reflect
Spy.
policy restraint that we're putting in place
Spy. Let me
to return inflation to
double
2%.
check.
We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic
391.60.
inflation, the committee decided to raise interest rates
That's not
by
even on
50
my
basis
chart.
points,
So
a step
the
down from 75
SMA, the
basis
weekly
points
SMA
set
20
over the
is
previous
currently
year.
at 391.60.
Of course, 50 basis points is still a
We'll just,
historically large
that's
increase.
not even on, I can't even
Still
go down that
some
low.
ways to go. As shown in the SEP, the median projection for the appropriate level of federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September.
391.60.
The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation, and we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
Let's see.
To conclude, we understand that
Still
our
listening to
actions
Powell. I
impact
mean,
families and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum
see, the
employment
question
and
is,
stability goals.
is it going to find a level?
Look forward to your questions.
Is it going to go all the way down to 391, 391.60, the weekly SMA? That's it. That's for the whole year.
Mr. Chairman, you just talked about the importance of market conditions reflecting the policy restraint
Yeah, stay the course until it's broken. You got that right.
Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High yield credit spreads have come in. The economy is
Steve Leisman's asking
the stock
questions now.
6%.
CNBC.
Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that? And how would you do something about that? Thank you. So, as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions,
Jeez.
and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and decisions that we make.
Okay, hold on. Let's check this out.
And react to our actions. I would add that our focus is not on short-term moves, but on
Right, so that's the VIX.
moves. And many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP again for
Okay, hold on a second.
our current assessment
So,
of what that peak level will be. As you will have seen, 19 people filled out the SEP this time.
slight divergence on the VIX.
17 of those
That
wrote down
is lower than that.
5% or
Slight.
So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows again that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on
Decisions will depend on totality of economic data.
and it could move down if inflation data are softer.
Gina Smiley, New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
As I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw the
Right.
strong inflation.
Yeah, the 5-minute. Yeah.
It was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're
Hey, look at that.
to the end of this year, we've raised
See, look, the 5-minute compared to the 65. Look at the big wick. It's trying to push it back up.
it's now not so important.
See, look at the VIX.
It's far more important to think what is the ultimate level, and then at a certain point, the question will become how long
We'll see though.
restrictive. That will become the most important question.
Oh
But
boy.
the most important question now is no longer the speed. So, and that applies to February as well.
Earlier, a few moments ago, I mentioned slight divergence, between right there, this point,
Where we see financial conditions, where we see the
and this
economy.
point. It's slight though. It's not.
The key thing, but decision. But ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not as restrictive.
You see the fade there?
Even with today's move, and we've laid out our individual assessments of what we would need to do to get there.
Not yet sufficiently restrictive. Not yet sufficiently restrictive policy stance.
How long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down and sustained.
Basically, on the VIX side, since this is the 5-minute chart,
If you
see, we need to see if so far the VIX is holding its 5-minute EMA. Right there, it's holding.
now, as we've been expecting really for a year and a half, that supply conditions would get better, and ultimately supply chains get fixed, and demand settles down a little bit, and maybe goes back to services a little bit.
So far, it's holding.
We're now starting to see that in this report and the last one.
So what the markets are trying to do, the markets are trying to carve out a higher low, trying to carve out that notch. That's what it's trying to do. It's trying to find a stopping point. It's got to stop the fall.
Into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that back,
Yeah, I could. Let's see. Does my mic pick it up?
sometime next year. The third piece, which is something like 55% of the index, PCE core inflation index, is non-housing related core services, and that's really a function of the labor market largely.
Yeah,
Because
that's
cost
as loud as I
before
can.
in that sector is
But
labor, and
let me
we'd like
think.
to see
Let me
a
think.
very, very strong labor
Hold on,
market,
hold on, hold on.
one where we haven't seen much softening.
I can
Job growth is very high,
probably
wages are very
hold
high,
on. Oh, I did
vacancies
think about
are
this.
quite elevated, and there really is
Jerome.
an imbalance in the labor market between supply and demand. So
Hold
that
on.
part of it, which is the biggest part, is likely to take a substantial
Oh
period
yeah,
to
hold
get
on a
down.
second.
The goods inflation.
Staying ahead of trends is a thing of beauty with American Express Business Gold.
I spent 15 years of my career trying
Okay,
to
enough
create the
commercials
digital
there.
notebook. Remarkable, solved it.
Taking the question. You described GDP growth in the SEPs as moderate or modest, I believe, yet it's really approaching stall speed. Half a percentage point is not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well, I'll tell you what the projection is. I don't think it would qualify as a recession, though, because you've got
Okay, you can hear
positive
it?
growth. The expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about a half a percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. If you look, you've got the reports we get from the field are that companies are very reluctant to lay people off, other than the tech companies, which is a story unto itself. Generally, companies want to hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there, far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
Thanks, Nick Timoros of the Wall Street Journal. Chair Powell, I want to follow up on Gina's question. The decision to step down the pace of rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year. You just now talked about making decisions meeting by meeting and being mindful of the lags of policy. Does that mean all things equal, you would feel more comfortable probing where the terminal rate is by moving in 25 basis point increments, including beginning at your next meeting?
So I haven't made a judgment on what size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly and having now so much restraint that's still in the pipeline, we think that the appropriate thing to do now is to move to a slower pace. And that will allow us to feel our way and and get to that level, we think, and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you consider how far we've come. But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including the
That's what I'm
income
talking
data
about.
in particular, the state of the economy, the state
The
of
market is
finance.
trying to make a higher low, the notch. And look, VIX is now failing its 5-minute EMA. Oh, you sucker. You sucker.
No, absolutely not. No,
That's the divergence I was talking about a few moments ago.
Practice,
Oh,
the
VIX.
SEP reflects.
See, the
any
markets
data
are
that comes
they're
in
coming
during
back
the
up.
meeting. And participants know that they know this, that they can make changes to their SEP during the meeting, well in advance of the press conference, so that
You
we're
like
not
that 1
running
minute,
around.
huh?
But that's not the case. It's never the case that
See?
the SEPs don't reflect an important piece of data
Oh,
that came in on the first day of the
man.
meeting.
The markets.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you
Ooh,
for
as
taking
of
our
right now, the
questions.
markets are going to
I'm
find a
wondering if we
bottom.
could talk about the projection
As
for
of
the
right now, look at
unemployment
that. Look at the
Why
VIX
has
is
the
losing
Fed
it.
raised its unemployment projection? Is it because the models suggest that a higher terminal rate would automatically cause a higher unemployment rate, or are you
Well, we'll
seeing
see. I
signs
don't
that the
wanna
labor
talk too
market
soon.
isn't quite as strong as we think it is now? Thanks.
No, it's not about the strength of the labor market.
It-
The labor
it-
market is clearly
It depends
very
on this
strong.
back
It is
test
more
right here.
just that,
Right here.
you know, by now, we've continually expected to make faster progress on inflation.
So I'm curious,
than-
like when I
than we
talk,
have, ultimately, and that's why
is Chairman Powell's
peak
voice
rate
like
for this
equally
year
as loud as mine?
goes up between this meeting and the September meeting. You see that you see the fact that we've made less progress than expected on inflation. So that's why that goes up, and that's why unemployment goes up, because we're having to tighten policy more. And so it didn't go up by much in the meeting, I don't think, but that's the
Interesting.
idea, is slower progress on inflation, tighter policy, probably higher rates, probably held for longer, just to get to where the kind of restriction that you need to get inflation down to 2%.
In order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the
Look at the
labor force
VIX.
population rate?
It's very hard to say. You know,
hold on.
you can look at history, right? And history would say that in a situation like this, the declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount.
Right.
And we're hearing from
He's trying to,
many
sure.
companies that they
Yeah.
don't want to lay people
As I'm
off,
listening.
so that they'll keep people because it's been so hard. I mean, I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4
bet he
million,
is.
who are
He's
in the
trying to.
workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means
Okay,
that companies
we
as
got
a
to
whole
watch
want
for the
workers, and
VIX
it means that
to
it may
attempt to
take
come
longer,
back
but
up
it also means that
and
the
reclaim
costs in
this
unemployment may be
EMA,
less. Again, that
the
we're gonna
EMA
find
line.
out
We got-
empirically, but I think that's a reasonably possible
Very
outcome,
interesting.
and you do hear many labor economists believe that it is. So we'll see, though.
Thank you. Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SEP? Does that not then suggest that the policy rate currently forecasted
that's-
for next year should
that's a
actually
lot of
be
selling
higher
pressure. Look at
than
that.
the 5.1 medium estimate
On the
penciled
VIX.
in?
Look at that big wick. Look at that big candle. That's
I
selling.
think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate
In the
as of
perfect world,
today,
right,
really,
Hugh?
as of today.
That's right.
For how high we need to raise rates, to
Look
how
at that,
much we need to
guys.
tighten policy to create.
It's found the
enough,
bottom. I
you
think
know,
it has.
restrictive
Well, let me
policy
switch
to
back over.
slow
What we need to
economic
see happen
activity
is
and
a green.
soften the
Yeah,
labor market and bring
ooh,
inflation
yeah,
down
right
through
there.
those
That's what I'm
channels.
talking about. We need to see a green
all-
candle
that-
now,
that's-
meaning
that
it's
is the
it's
estimate,
back going to the
best
upside.
estimate we make today.
It's
And,
finished
as
back
I
testing.
mentioned,
It's
we'll
going to
make
go back
another
up.
estimate for the next SEP, and we'll, of course, between meetings. we
Interesting.
but we don't publish it.
See? Uh-oh. I'll be damned.
Hi, Victoria Guida with Politico. I wanted to make sure I understand specifically what's going on in the SCP, because
see, though.
you all
I don't
expect
wanna.
rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering,
I'll
given
be
that we
damned.
have seen some cooling in inflation, is that primarily because of wage growth, that you expect wage growth to be sort of a headwind?
And we're going into next year with higher inflation than we had thought, right? So we're actually moving down to the level that we're moving down to.
Yeah,
There's still a very large drop in inflation from where
Well,
inflation's
yeah,
running
we gotta
now,
wait.
well
We
more
gotta
than
wait.
1%.
Can't
change
make the
in
call.
Inflation. But remember that the jump
Really,
off point
you
at the beginning of
need
the year is
a
higher.
green candle
So,
going up
we-
and closing a green
we're
candle.
moving down
That
still
will stop
by a
it.
very large chunk. I don't think the policy's having any less effect. It's just starting from a higher level at the end of 2022.
gotta wait.
So we're getting down. I
Look at
believe
that.
the median
Because,
is 3.5%.
yeah, see-
That's a pretty significant
well,
drop in inflation.
56.
And, where's it coming
Oh,
from?
that's the
It's
start of a
coming
new
from-
candle.
It's coming from the goods sector, clearly. By the middle of next year, we should begin to see lower inflation from the housing services sector. And then, the big question is how much will you see from the largest, the 55% of the index, which is the non-housing services
Wow.
sector. And, that's where you need to see we believe you need to see a better balancing of supply and demand in the labor market so that you have. It's not that we don't want wage increases.
1 hour
we
is
want
still in the
strong
positive.
wage increases. We just want
Hey.
them to be at a level that's consistent.
Guys,
with 2%
5 minutes
inflation.
curling up now.
Right now,
It's flattened out and it's curling
if you-
up.
If you factor in productivity estimates, standard productivity estimates, wages are running, well above what would be consistent with 2% inflation.
Well.
Hi, Chair Powell. Neil Irwin with Axios. Some of your colleagues have been pretty explicit that they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP.
It's forming a wedge.
But futures markets
right now.
have priced in some easing in the back half of next year.
There's your wedge.
What's your view of the likelihood of any kind of rate cuts next year? What circumstances might make that plausible?
We gotta watch the
focus right
VIX,
now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way.
Guys.
I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2%.
Okay, so look at the 1 hour now.
That's
Close that big hit, big,
and you're correct.
big long
there are
candle.
not rate cuts.
But now it's forming a new one
in the SEP for 2023.
Steve Matthews with Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly. I'm wondering if you see that as disinflationary because you're seeing supply chains improve, or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth and for commodities prices.
Yep, it's wedging.
And so you're right. Those two things will offset each other. Weaker output in China.
It's
will
impossible
push
to say
down on
right now.
prices, but it could.
You got to look at the
interfere with
VIX.
supply chains ultimately, and that could push inflation up in the West.
gotta
It's
look-
very hard to say. How much how
What are
those
you
two
doing,
will
Vic?
offset
Hold
each
on a
other, and
second.
it doesn't seem likely actually that the overall net effect would be material on us. But to your point, China faces a very challenging situation in reopening. We've seen waves of COVID all around the world can interfere with economic activity. China, a very critical manufacturing place for manufacturing and exporting. Their supply chain is very important. And China faces a reopening.
Interesting.
They've backed away from their COVID restriction policies that could be very significant.
Is he going to do it, guys? Look at the
in
65-minute
COVID, and
now.
We'll just have to see. It's a risky situation. But again, it doesn't.
The
It
VIX
doesn't
is getting
seem
worse.
like it's likely to have material overall effects on us.
Hi, Chris Rugaber, Associated Press. Thank you for taking my question.
So that was yesterday.
I wondered if you could comment a bit more about yesterday's inflation report. I mean, it
Look at
showed
that.
inflation cooling in all three of the categories that you laid out at Brookings. Are you starting to see? Are you confident that you're seeing real progress on getting inflation under control? Are you still worried it could slip into some kind of unentrenched, upward spiral? Thank you.
Right. So the data that we've received so far for October and November, we don't have we have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace of price increases. As I mentioned in my opening statement,
I'm telling you
take
guys, here we
substantially
go.
more evidence to give confidence that inflation is on a sustained downward path.
Oh, but you got to watch out
the
for
way we
VIX.
think about this is this.
I think
this report is very much in
you got to
line
watch out
with
for
what we've been
VIX.
expecting and hoping for. And what it does is
I
it provides
would
greater
I would
confidence
wait
in
till
our
you get a
forecast of
crossover on the
declining
MACD right
inflation.
here.
As I mentioned, we've been
I wouldn't
expecting
I wouldn't commit
forecasting
just
significant
yet.
declines in overall inflation and core
See, it's not
inflation
quite crossed
in the
over
coming
yet.
year. And this
Not
is
quite.
the kind of reading that it will take to support
You
that.
gotta
So
get- you
really
gotta
this
get it.
gives us greater confidence in our forecast
Because
rather
on
than
the
at
here
this point
here on the
changing
65-minute, the
forecast.
MACD is still above the zero line. It never
in terms of the
crossed
pieces,
below the
we have
zero
been
line.
expecting goods inflation
Very
to come
interesting.
down as supply
Yeah,
chain
I
pressures
wouldn't do
eased.
it just yet.
It's
You got to
happening
wait.
now.
You got to get
Housing
confirmation.
services, as I mentioned,
On the
there's
MACD.
good news in the pipeline. As long as new housing leases show declining inflation, that will show up in the measure around the middle of next year, so that should help. And the big piece, again, is core services ex housing, which is very important, and we have a ways to go there. You do see some beginning signs there, but ultimately, that's that more than half, as I mentioned, of PCE core index, and it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly earnings number we got with the last payrolls report. You don't really see much progress in terms of our average hourly earnings.
Yeah, I mean,
coming down. Now there may be composition effects and other effects in that, so we don't put too much weight on any one report. These things can be volatile month to month, but we'll be looking for wages moving.
I'm telling you right now, it's holding serve.
Where workers are doing well, and ultimately their gains are not being eaten up by inflation.
There's excuse me, Michael McKee from Bloomberg Radio and Television. There's a little bit of a disconnect between the optimistic view you just expressed about the economy and the changes that you've made in the SEP. And I'm wondering if you're reacting to the fact that the markets have loosened financial conditions, or if you feel the Fed may be a little bit behind on inflation. Whether
you guys?
The recent disinflation we're seeing is transitory or not, and how this affects the idea of a soft landing if you're projecting just 0.5% growth for this year.
So, if I think I got your question. So,
here we go.
One thing is to say is I think our policies in getting into a pretty good place now. We're restrictive, and I think we're
the MACD's crossing.
We're getting close to that level of. Sufficient.
Here we go.
Sufficiently restrictive. We laid out today what our best estimates are to get there.
I'll be damned.
And I mean, it boils down to how long do we think this process is going to take?
Hold on, I'm picking up some
we welcome these
stuff.
These better inflation reports for the last 2 months. They're very welcome, but I think we're realistic about the broader project. So that's all. That's the point I would make. It's, we see goods prices coming down. We understand what will happen with housing services, but the big story will really be the rest of it, and there's not much progress there, and that's going to take some time. I think my view and my colleagues' view is that this will take some time. We'll have to hold policy at a restrictive level for a sustained period, so that two good monthly reports are very welcome. Of course, they're very welcome, but I think we need to be honest with ourselves that there's inflation. 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's just understand we have a long ways to go to get back to price stability.
I'll be damned.
No, I wouldn't say that.
That means the markets, to me...
I would say this,
yeah,
to the
it's
extent
crossed.
We need to keep rates higher and keep them there for longer.
Go for it, guys. Go long.
Moves up
it's
higher
crossed.
And higher. I think that narrows.
It's
the
flattening
runway,
out, and now it's going back up, and that's going to eventually flatten out the.
In time, could
the
certainly
hourly.
make it more possible. So I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable, and certainly. Lower inflation reports, were they to continue for a period of time.
Okay, I mean, so I'll turn down his volume a little bit.
So I would put it this way: of a return to price stability that involves significantly less of an increase in unemployment than would be expected given the historical record.
So it's going to start out with the MACD flattening out, which it's doing, and you keep this up. Then it's going to flatten out the larger time frames.
You warned Americans of pain earlier this year as the
right.
Fed hikes rates.
So it's got to sustain this.
It's
got to sustain this.
Just wondering where we are in that pain. How would you describe that to Americans if the projections on unemployment find themselves? That would be 1.6 million Americans out of jobs.
So the largest amount of pain, the worst pain would come from a failure to raise rates high enough and from us allowing inflation to become entrenched in the economy so that the ultimate cost of getting it out of the economy would be very high.
So
in terms of unemployment, meaning very high unemployment for extended periods of time, the kind of thing that had to happen when inflation really got out of control and the Fed didn't respond aggressively enough or soon enough in a prior episode, 50 years ago.
403.18.
So that's really the worst pain would be if we failed to act. what we're doing now is, it's raising interest rates for people, and so people are paying higher rates on mortgages and that kind of thing. There will be some softening in labor market conditions, and I wish there were a completely painless way to restore price stability. There isn't, and this is the best we can do. I do think, though, that and markets are pretty confident, it seems to me, that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
Mr. Chair, Grady Trimble with Fox Business. You've reiterated today, and the committee has reiterated its commitment to that 2% inflation target. I wonder, is there ever a point where you actually reevaluate that target and maybe increase your inflation target if it is stickier than even you think it is?
That's just so changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal.
Look at the VIX, guys.
Woo! To get inflation back to 2%. I think this is the best way to be thinking about that. I mean, there may be a longer run project at some point.
It's weak.
But that is not where we are at all. The committee, we're
not
considering that. We're not going to consider that under any circumstances. We're gonna keep our inflation target.
Oh, I think it did it. See? It bounced off. Oh no, well no, this line is actually imaginary. I just drew it down there.
As you monitor wage growth and unemployment data, I wonder if you're paying
higher lows,
attention
up
to a sector or even income
Hold on a
level.
second.
Like,
It's
how
kinda
do you
loud.
factor potential exacerbations of inequality into your risk calculations, especially given the K-shaped recovery of 2020?
Coming up to meet the 65-minute EMA 50. Let's see if it holds that one though. Let's see what's up.
The labor market that we had in 2018, 19, 20. So what that looked like was wage increases for the people at the lowest end of the income spectrum were the largest. The gaps between racial groups
So
and
let's
gender
get back to
groups
the
were at their smallest.
65 chart.
All of that because of a tight labor market. A tight labor market which had inflation running, just a tick below 2%, and the economy growing.
That's what
right
this
at
line is right
its
there.
potential.
65-minute.
That seems like something that would be really good for the economy and for the country if we could get back to that. And so that's what all of us want to do. We want to get back to
Look at that.
long expansion where
I think
the labor market can
at the end of the
remain
day,
strong over an extended period of time. That's a really good thing.
the market's
for workers
initially shocked by the number right there. That was the 1 to 3 year forward projection.
We have to
Spooked them.
to restore price stability, but we can't. What we have to think about is the medium and long
But then
term. If you think
they've
about it,
internalized
the
it.
country went through a difficult time, I think.
And as I was mentioning earlier, they don't believe them. They said, you can put those numbers out there if you want. You're not going to get
set
there.
up our economy for several decades of prosperity. So price stability is something that really pays dividends.
30
for the
to
benefit
15 to
of
30
the
minute
economy
time
that
frame
people
with
have
options.
over a very, very long period.
30 to
of time.
50
So when
minute
it
time
is
frame.
lost for whatever reason, it has
15
be
to 30, sorry, 15 to
restored
30.
as quickly as possible, which is what we're doing.
Huh. Is there a reason, you like 15 to 30?
We do.
Usually,
we absolutely do. We look
15
at,
to 30.
It's our regular practice to talk about unemployment rates by different.
I usually don't make decisions on a 30-minute time frame.
Sort of thing. We do. Keep our eye on that.
Because like what we're looking at right here on the 5-minute, it starts with the 5-minute, and right now it looks like it's recapturing momentum before the, for example, the 30-minute even shows what's happening. See, here's the 30-minute right here. See that right here. The 30-minute right here, it's not granular enough to make a decision. See that? I can't tell on a trend reversal or whatnot. But I can tell right here, I can see that, oh, you came up, bounced, made a higher low, up, higher low, up. See what I mean? Before the 30-minute, see that doesn't tell you much. The 30-minute just tells you, oh, it's wicking. That's a good sign. There's a lot of buying pressure. Man, I can't believe it.
Where we're missing is on the inflation side, and we're missing by
Wow.
the inflation side. So
So
that means we need to really focus.
I always suggest 5-minute. That's
what we'll do.
that's it. It starts with the 5. As I've been saying, if you can't clear your own EMA, which it's going for right now, it went all the way down here, but it was clearing other time frames EMAs, which is a good sign. Now it's about to now it's about to take its own.
Thank you, Chairman Powell. Greg
So,
from Market Watch. You spoke
yeah,
a little bit ago, you said
I
that
make
the
all
US looks-
decisions,
it
all
looks like
trading
we have a
decisions from the
structural
5
labor
minute actually,
shortage in the economy. Could you expand on
using
that and talk
the
a little bit
30
more
and
about
the
that?
65 as supplemental.
Are you talking about getting Congress action on increasing like legal immigration, things like that? Thank you.
5 to
So
15
what I
time
meant by
frame.
that, the structural labor shortage is if you look at
Yeah,
where we are
so-
now, as I mentioned. If you
Yeah,
just
was
look
that
at
other
the
video that I did not helpful enough?
vacancies,
The one that
people who are actually working,
was over a month ago,
supply of labor
because it was
right now
basically using only the 5 minute
looking
time
for a
frame
job or have a job.
to make
I mean,
decisions.
more than 4 million people short. We don't see, despite very high wages and
405.
an incredibly tight labor market, we don't see participation.
Oh, I tell ya.
Which is contrary to what we thought.
Right,
So
look at
the-
this.
the-
Look at this
the
big old
upshot
green
of all
candle,
is
guys.
the
That's
labor
not.
market is actually, it's 3.5 million people at least.
See, look at that. Look at the VIX.
Based on pre-pandemic.
So,
just assume population.
I think it's
aging of the population.
what
Labor force
finish
should be
what I was
3.5
saying earlier.
More than it is, and that it can.
They
there-
don't
there are easy- lots of
believe
easy
him.
ways to get to bigger numbers than that.
I mean, you guys have been hearing him talk,
So
right?
why is that? Part of it is just
Yeah, I agree. He
accelerated
sounds
people dropped out in our
like he's trying to spook the markets. I mean, he sounds hawkish, right? Talking about the labor and talking about the economic conditions. But I don't think the markets believe him anymore.
And part
They
of it
don't
is
believe that he's
immigration.
going to be able to get to that target.
We don't prescribe, it's not our job to prescribe things, but I think if you
Actually, I think you were asking me a question directly from that video. It's like one of the first 5 videos I ever did.
I tried to identify
You know what I mean?
in a speech I gave a month
Yeah.
ago, but I stopped short of
Like the first 5, just go to my oldest videos. It's like the first 5, something like that.
do that job.
Where I only stayed on the 5 minute, and I talk about trend changes. I talked about
Jennifer Schonberger with Yahoo
come up,
Finance.
successful back
You
testing.
say you expect growth of just 0.5%.
Like here's an example. Here's a classic example. Here's a successful back test on the 5 minute chart right here. Granted, it's using the EMA 50 from the 65 minute, but this is a successful back test. Up, down, up. This is here right here is an example of a failed. That's going to fail.
We make our forecasts
Because it's straddling the line and then it failed. But up, back test, up. Like up, back test, up. It's basically the same pattern over and over again. SPY 406 best case.
And you see inflation.
Hey, what do you guys think? Well, hold on. We got a nice little wick going on. You guys, this line, that's the 2022 weekly EMA 50. This line right here.
We don't.
It's going for it right now. It's going for it.
This kind of
This is this line that it's within.
The staff runs.
It's close enough to kiss it. This is the one it cannot clear all year. Clear and well, I'll say clear and hold, not just clear. I mean, it cleared it obviously earlier, then it dumped. But it's going for it again.
For many decades. But no, we don't. We haven't asked ourselves that question.
Man.
Hi, Jean Young with Market News. I wanted to ask about the SEP again.
To
If you're
me,
reaching peak rates around 5% in the first
it
half
shouldn't
of
just
next
try
year,
to go
and
for it
inflation
like it was
starts to
doing right
decline
here.
materially,
It needs to be
that will seem to make
consolidating
the
under
real
it.
rate
You need to build
gradually
strength.
more
You can't just
restrictive. Is that
climb,
something
climb,
that's
climb,
built
climb, climb, and
into
then try
the
to break through it. You
projections
gotta
and into
consolidate like right here, under it, and then go.
We do know that, of course. That's something that.
I mean, it's 3:15. You got
But
45
as I
minutes.
mentioned, I wouldn't see the committee cutting rates until we're confident that
Okay,
inflation
so
is moving down in a sustained way.
right
That
now,
would be my test.
it's
I
at
don't
its
see us
own 5 minute EMA
having a
50.
really clear and precise
And
understanding of what the rate is and what real rates are.
oh yeah, hold on, 2:16 p.m.
Be a test of,
Is that
for
candle going to
cutting rates.
close?
I think in the event it'll be a question of
Yeah, if it closes right now, That's bad. That's bad. See, it's straddling the line. That's not good.
Thank you very much.
Oh, okay. Here, see, here comes VIX. Here comes VIX. So, have they stopped? I think they've. Yeah, Fed Chair Powell is leaving. He left the podium. And camera is zooming out. So the time is 2:16. I'm just asking because of the candle closing, the 5-minute candle. So it must have just started the candle. Yeah, it's just started. So you still got another 2:17. Yeah, you got another 3-4 minutes before it closes. So Chair Powell is done speaking. I think we can all agree he sounded hawkish, for sure. Interesting. Ooh. Yeah, see, that's a big. There's your big red candle. Right there. Let's see what VIX wants to do. How high it wants to come up. Let's just see. Let's just see. So, down, up, down. I think it's gonna try to wedge right here in between its EMA 50, the red, and SMA 20. See, so it started up, down, go down, come up. I think it's gonna try to wedge, especially when you're talking about the 65 EMA 50 line right here. There's the weekly EMA 50 right there. See, you see what I mean? It's gonna consolidate right here. I mean, but it's 3:18 Eastern time. You got 40 minutes left to go. Are you really gonna, even if you try to go for it with this much time into the close? Wow. That won't necessarily mean futures will hold it. Well, it's tough. Like this, this clearly held above the weekly EMA 50 right here. Clearly. Yeah, it's consolidating. Whew. 30 minutes, 1 hour. $403, 403.18. Yeah, I'd be surprised if we got a surge attempt to go above 403, basically 403. That's the weekly EMA. Wow, are we gonna get an attempt? Yeah, I think what the markets are going to go for is on the 5-minute MACD. I don't think it's going to try to get back to the zero line per se. It's just going to flatten out. Well, you never know, man. It's just going to it should try to flatten out, kind of create that higher low, and then go up again. But let's see. 405. Whew. Okay, but if it's 405, that's above the weekly EMA. If it's 405. That's interesting. So, I mean, the VIX isn't looking that strong. See that on the left-hand side there? That's not looking promising to me. No, it is not. Interesting. What do you guys think? Do you think it's yeah, I think the markets don't believe Powell anymore. They're like, you can't. That's why they haven't. Wow, see, we're still in that trading range right there. Look at the upper and lower, and we're right in between the 5-minute EMA and SMA 20. We're still in the range. Huh. What could possibly cause this thing to crash now? Powell had his chance to speak his piece. And he most definitely was. Most definitely was. Hawkish for sure. There's no question about that. You know, basically he was pointing out all the negatives in the labor market and the correlation earlier. So we didn't crash despite the hotter forward projections. Yeah, see, look at the 30-minute. Okay, so that's a big wig up, and this is a big green candle. Interesting. Yep, it's forming the wedge formation. Similar to this one here earlier. See that right here? This one and this one. Wedge, and then boom. I think it's going to go wedge. But the question is, does it attempt to go boom? Right? Depends on what VIX is doing, and I'm not seeing too much action there. Let me see. Interesting. Yeah. Here's the RSI, 5-minute. It made technically a higher low right here. On the RSI, you made that little notch right there. Right there, even though that was a lower low. Boy. See, guys? See what it's doing so far? Up, back test. Up, back test. Up, back test. Is the next one up? Whew. We just gotta wait. Gotta wait, though. Ideally, I think I'd like to see it go into close, just wedging. Don't try to make that attempt up. just go into close, staying right in this zone, and letting the futures market consolidate. Right? Just kind of let it consolidate. Don't try to make any big moves. But yeah, see, here we go. Here we go. Yeah, see the VIX. That's VIX is gonna respond up here, coming up here like this. We need to see what's up here. Interesting. See how it likes that 65-minute EMA line? Look at that. It liked it here. It likes it again. Let's see if he can hold it, though. That's important. We're on the back test. One, two. This is the third back test of the series. See if I can see who. Okay, that's weird. It says that I'm the only participant. That doesn't quite. Are you guys still there? Can you guys hear me okay? Huh, interesting. Because, oh, well, now you're there. But earlier it was just me showing. That's weird. Okay. Is James Bond still there? I don't know. I'm not quite sure how all that works. Here's Vix's response. Here he comes. Here it comes. Here it comes. Here it comes. Oh, yeah. See, here's the back test. But the back test is still technically a higher low as long as it is higher than this point right there. See what I mean? It would be ideal to bounce off the 65 EMA 50, but interesting, interesting, interesting. Let's see here. Hold on. Okay, big wick. Big wick down. Big wick down. Well, it looks like it's just you and I. James Bond suddenly stopped typing a while ago. That's why I was wondering. Interesting. Huh, Mr. Hollander. That's so strange. I can't see. You guys can see my screen, right? Well, now I can see you. But earlier, it was just me, first of all, and then Junior Dill started speaking, and then he showed up, and now you show up. That's so strange. I don't know. I don't know. I don't know what's going on with that. Yeah, see, here's Vix's response. Pretty typical, pretty typical. You gotta wait for Vix is gonna respond. Okay. Eight watching, huh? Okay. Okay. Look at Hughes all at work on a conference call. It's okay. No problem. It's just on my side. It clearly, maybe I can, hold on. Maybe I can see the stats on something else, another screen. No biggie. Okay, so see that? Even though it came down, it's still holding at a higher low though. See, it's just carving something up and now it's going down. Still making a higher low. Oh, I see. Okay, probably. Holland. That makes sense. I mean, with 30 minutes left to go until closing bell. What's old VIX doing over here? He gapped up. Got a wick going down. Yeah, see? Okay, see? Here, that's what I'm referring to earlier when I said, ideally, I didn't think it was going to try to go back to that zero line. I think it was going to, it's like, no, you need to kind of curve off, go here, and make the higher low. That's what you're doing right now. That's what it's trying to do, at least. Yeah. Create that higher low notch. See that? That's how you stop the fall, stop the bleeding. You got to create the notch. And so far, it's trying to do it. I'm not saying that it will, but it's trying to. And it looks like the VIX is having trouble on its back test. So it failed. It failed its 5-minute EMA right here, clearly. Coming back up, and it's getting rejected. That's not a good sign for you, VIX. You get rejected right here. Your next step is even down even more. So, interesting. You gotta hold the line. You gotta hold it right here. See that? You gotta hold it. You can't. I mean, technically, you could come down and make another double bottom, but wow. That's pushing it. Yeah, see, like, okay, that's the big wick in that 30-minute time frame. Right here. Yep. You just gotta let this play out. There's no other way to forecast it right now. It has got to play itself out. Yeah, that's what you're looking for. You need the higher low. You need the green candles. Okay, it's creating a. Yeah, there's no way it's going to commit with the last 25 minutes into closing bell. It's just it's carving out that wedge. See, here's the top, here's the bottom. Interesting. Interesting. Maybe I'll type something. Let's see if I see something. Or, here, hold on. Live chat, all messages are visible. And then maybe, well, okay. It's all right. Yeah, the hourly 65 looks ugly. Huge red wick coming down. 30 minutes, that's the big red wick. So this is the next 30-minute time frame. Interesting. So although it did not like, the markets didn't like that future projection, it's not crashing. See what I mean? It's not. Look right there on the screen. What's happening? Because markets are always forward-looking. Right now, my thesis is it just doesn't believe the Fed anymore. It doesn't believe the Fed's projections will be achieved. I think it thinks that the Fed will pivot before they even get to there. Because, you guys remember last time on 11-2, when Chair Powell spoke up, took the mic dropped everyone, markets just went down. But now it's not. See what I mean? Okay, so, yeah. Down, up, back test, up, back test. That's a higher low so far. Yeah, it's wedging. That's exactly what it's trying to do. Interesting. Right. Oh no, last time. Oh. As soon as he stepped up there within 5 to 10 minutes, markets just cratered. Just cratered. That's not happening. Because, Okay, so this is a key point. Yeah, we still got 20 minutes to go. Right here, VIX on its 5-minute chart is going for its EMA. Just like, naturally the market SPY wants to go for its EMA. So right there, it's going for it. But what's going to happen is if it gets soundly rejected, I rarely see a second attempt. It's just down, up, rejected, and then you're going down even more. It's usually what I see. I don't see a second attempt at it again. Well. That's interesting. So had those projections not come in so hot, it would have been a huge surge. But right now, they're just trying to stabilize, consolidate. Very, very interesting. See that? Yeah. Stabilizing. Yeah, see? So far, we'll see. Down, up, rejected. Yeah, VIX just got rejected. When the move is this big, you don't see a second and third attempt. Normally, I've not really seen that. It's just you attempt once and then that's it. Yeah, VIX got rejected. This is the 5 minutes chart. Interesting. That is encouraging to see. Let's see. Yeah, sure, no problem. I mean, see, if I was looking at the 1 minute chart, oh, this would be so messy. It's tough to decipher. You know. Plus, on the 1 minute chart, when you're charting the EMA 50 on the 1 minute, oh, that's a different number. That's not 2219. It's, we'll see what it is. 22. It's probably lower. Yeah, 2180. Yeah, see, it's lower. So I can't. No, I'm gonna stick with the 5 minute. 2219 is a higher bar, anyways, right? Than what was that? 2180. So yeah, see that? The candle's getting bigger. Well, I'll be. Look at that. Look at that. Look at the 30 minute now. It's on the green candle phase, going up. So, where'd you end up there? So we could say markets are stabilizing. It's stabilizing. So far. But I think it's still trying to form that wedge. That's really what it's doing. And save that decision making for tomorrow, perhaps. Not today. We're running out of time in the trading day. Futures are probably. Oh, my guess is it's gonna be flat. I mean, I can't see them taking off in futures tonight. I cannot see it. So let me do something here. Hold on a second. I'll be darned. What is the date? Hold on, I'm just doing something else on my phone. Let's see here. Let's go. Choose something. Okay. It's stabilizing. That's how we can describe it. See, check out the VIX. See what I mean? It's like So it's not over. It's not over. So we can expect futures tonight to be flattish, most likely. I don't think there's going to be a big move. And then they're going to settle something tomorrow, I think. Something's going to be settled tomorrow. If the VIX were so strong for still sell-off, it wouldn't be looking like it is right there, right? Like last time. Massive, massive sell-off. I'm going back to my original thesis. It doesn't believe what Powell's saying. It's like they're shaking it off now. So interesting. Yep. I'm looking over at the 30 right here. Check it out. It looks good. Finish up what I was doing on my phone also. See, check out the VIX. Just going lower and lower. See, that kind of look, no, it's not going to make a second attempt. So it's not going to make a second attempt. Somebody's sending me a IM here. Hold on a second. I'll respond to that. Sorry, today I was asking if the conference center that Columbia Farms was. Large hotel with conference facilities would work. Last part of April. Let's see. Wow, look at that. Yeah, but I think what it's doing is it's carving out the top side of that wedge. Right there. See that? It's doing that. And then it's going to do that. That's what it's doing. Oh, interesting. I think we're going to have to save this for tomorrow. 10 minutes left to go. It's just going to keep carving out that wedge. That's what it's going to do. Interesting. A lot of choices. That would be typing. Okay. Yeah, see, I see what the VIX is trying to do also. You're trying to form your little wedge too, I bet. Yes, you are. Boy, the fact that you didn't fall, though. The fact that markets did not fall like it did all other times of the year. And the weekly, yeah, see, let's see if that came out of view. Now, hold on a second. We didn't even, yeah, 391. Move that over here. That's not 391, that's 397. But 391 is still way down there. Way down there, right? That's not even in the view. We're closer to the top than we are to the bottom. See what I mean? Boy. Yeah, 391 is way down there. We're at 399. Okay. Yeah, he's just going to consolidate into close. Hey, James, were you like just temporarily stepped away or something? Or were you there the whole time? Curious, because I asked earlier. I was like, oh, he must have got disconnected because I thought I was the only one left on the stream. See that? Yeah, it's. Oh, okay, gotcha. Yeah, you're away. All right. No, I was just wondering. I was like, am I the only one left on here? Because I couldn't see anybody in my window, my chat window. But that's just probably because of the just the nature of the streaming software I'm using. That's all. See that? Okay, while you're away, yeah, we're wedging. We're wedging. 403 right here. Here's this is the 2022 weekly EMA. It's right there. And the bottom is 391. We're nowhere close to 391. See what I mean? So if Jay Powell today and whatever happened after his press conference and after the forward projections didn't crash the markets, what is left to do so for the remainder of the year, right? You guys have any thoughts on that? If after what happened today didn't crash so far, what's left? So, man, I'm thinking, yeah, this is going to just consolidate into close. We're going to get a flat futures. And one way or another, this is going to be settled to be continued into tomorrow, for sure. That's what I think is what's in store. Yeah. Man, I got to get something to eat too. Gotcha. You been all here all along, Russell? Wait, is it quad witching Friday? This week? Oh, that would make sense. What, I mean, let me know what your guys' thoughts are on this. I mean, see, here's the 30 minutes. Down leg. Now I think it's found support and it's going to try to go up. Options expiration. Gotcha. So what's your prediction, Russell? Where do you think we're going to go tomorrow? Or do you think we're just going to be in a range, trade in a range tomorrow? What do you think about that? Is that what you think? Trading in a range trading, flattish. I mean, if you're range trading, you're technically consolidating also, right? You're yeah. I want to see how. I mean, so obviously, so far on the 5 minute, that's a good sign. Higher low, coming back up. If this can just kind of continue, into close and overnight into futures, that will cause the 30-minute and the 1 hour to flatten out as well. That's the deal. 404. That's where you think it is. Then sell off next week. 404. Okay, so yep, 403. 403. Remember, is the weekly EMA 50 that it has been unable to claim above all year long. It's right there. It is within striking distance. So you think it's going to go 404, then sell off next week. Okay? Yeah, I mean, I think it's going to try. I mean, you're this close and you're in this formation. How could you not try, right? And you haven't crashed. So you think it's going to sell off next week, huh? So no Santa rally. Therefore, is your prediction, right? No Santa rally. So 3.7 trillion in OPEX for Friday. Do you guys look at like the Max Payne and all that kind of stuff? Do you follow all that? I know there's a maxpayne.com. I haven't looked. What's the Max Payne for this week? I would think more people have puts in than calls. I would think. Yeah, see. You guys see the wicking right there? That's the wedge. That's the top of the wedge. Here's the wedge. That's exactly what it's doing. Right there. It's wedging. I want to keep us guessing a little bit more, a little bit longer. You're going with Santa Rally, pal. Wants a soft landing. Pump last 2 weeks and drop in January. But boy, the fact that we didn't crash. You know what I mean? And here, as I have up on my screen, the weekly SMA. Actually, can I just show you right there? Hopefully it's not going to have too many lines. Yeah, it's got a lot of lines, but that's okay. 2 year, let's just go 1 year, make it a little bit bigger. Yeah, we're basically, it's tough to see. Let me get rid of that. I'll get rid of that too. Just so it's easier to see. Yeah, see that? I mean, we're smack. Get rid of that too. Look at that. Pretty much right in the middle. Right in the middle. So, there's the lower. There's the upper. There you have it. 75% accurate. What's that in reference to? Let's see here. Okay. Right. Consolidation, especially tonight, futures, and into tomorrow morning. Yeah, I mean, what at this time, what news outside of Mr. J. Powell would we get that would be so catastrophic? As we know, FOMC is the talk of the town, right? For as far as market goes. Yeah, the Fed, old Brainerd and all those guys. Bitcoin at the bank selling off. Oh, you've been watching Bitcoin? I haven't been. I haven't been. I almost like never look at them. Bitcoin. Bitcoin, an old cryptocurrency there. Yeah, that. But old Jay Powell, though, I mean, Jay Powell is the leader of the pack, the wolf pack, right? The whole Fed, I mean, he had his chance, and he had his Q&A, and the markets didn't crash. Oh, BOA, Bank of America, looking really bad right now. Are you into bank stocks, Russell? You like looking at that? Is that your cup of tea? So what's the consensus? Wishes. Yeah. So I think a couple of you were thinking, at least, I saw 404. That is above the weekly EMA. Maybe go to 404, then dump next week. So sounds like perhaps the general consensus is the next move is at least up and not down, right? The next immediate move. So we'll have to. Yeah, I think old little Jay Powell there just trying to not try. He definitely his words and the future rate projections trying to spook the markets. I mean, his tone today was effectively like it was when he did the Jackson Hole speech, right? I mean, he sounded serious. He didn't sound like he was playing around. But I just think that. Have you guys been following? Hold on, I gotta send an email real fast. Let's see. See, have you guys been following those reports of imports, exports from China or overseas? Imports into the U.S. have declined significantly, like 80%. Okay, have you guys reading reports on that? Right, big, right? Is that what you're talking about? Oh, big sell. Let's see. If it wasn't for OpEx, we'd be selling off big time. Think so, huh? All right. So, anyways, there've been reports about massive, significant declines in imports. Cargo, cargo is significantly reduced. Shipping prices, because the demand has dropped off a cliff, 70-80%. And what that means is that that's less demand, right? Obviously, if you're not shipping stuff to us, that's less demand. And so that's lends itself to deflation, not just disinflation, but deflation. And I know the markets know this because, I mean, if I know this, then the markets have got to know this. And I wonder if they're factoring all of that, what they currently see happening, into when they try to square it with what was released today by FOMC and what Powell keeps trying to say. And they're like, man, you're not going to be able to continue at this rate, given what we already know is happening around us. Lending itself to what I mentioned earlier. I'm just wondering if the markets don't believe him anymore. So, all right, that's basically a summary of my thoughts on that. They were just initially shocked, obviously, at the higher year-over-year projections, right? Causing, this and then that. But then they're like, But see, boy, I think the markets. Yeah, tomorrow. They've got to try. They've got to try to go, in my opinion, higher than 404. If they want to keep the higher highs intact, you've got to go higher than 404. Because if you don't, now you're making a higher low. But, all right, this was the low. 65 minute. Let's go 10 days. Right. Yeah. Let's just see how this. Oh, see, there's the hourly. Starting a new hour right there. A few seconds ago. Of course, that's too early to tell. See, you like that wedge is forming? Perfect. Look at the wedge. Actually, I just looked at the time. The market's been closed for 10 minutes now. Didn't even realize that. So we're now in extended hours. Didn't even realize that. The 4 hour. Ooh, let's see here. Switch over. Let's go. 240. Oops. Right. Right. It looks like it wants to, but it's got to start with. Yeah, you're right. It looks like it wants to, but it's got to. So the 1 hour is kind of heading down, but it's got to start with. Oops. Oh, so here. Let's go back to the 5 minute right here. See, this is a good sign that it's going up. It's just got to keep creeping up all night. Just keep creeping up. Get back to the zero line and then just stay there at the zero line all night. And if you do that, the 1 hour, the 65 right here, will flatten out. And stay above. See that? Stay above the zero line. Once it starts to then flatten out, then you can really start to go back up. So, and keeping to the 1 hour trend. So here's your low. Here's your starting point down here. That is still a higher low than that at this time. So if you can close on the 65-minute above zero, that's always positive, right? You didn't cross into the negative. If you can close, flatten out above zero, this is a higher low than this, and that's still bullish. See what I'm saying? That's not bearish. So simply unfinished business. Got to shake out all the Santa rally bulls too. Stay down there. 385 by Christmas. I'm shorting until then. Yeah, 385. That's way down there. That's not even in my view, in my scale. Yeah, I remember the last time we were at 385. Jeez. It's been over a month. And 390, yeah, 390 is on the monthly scale. You're talking about the gap. Is that what you're talking about? The CPI gap? Yeah, I think that's what you're talking about. So So do you think we go down to 385 only to rally back up by end of the year? 385 by Christmas, and then, or no, because to me, once we get down to 385, oh, that's it. We're not going back up. Not in my opinion. So right now, the pattern is suggesting, because you're so close to 403 right here, the weekly EMA 50, the pattern is suggesting you try to hit that first, and whatever success you have, if you don't make it, then you're going down. That's how I'm seeing the situation play out. Then you go down and revisit 385. Yeah, I think that's more likely because you were right. Look at, we closed at 400. It's 403. Like, you're right there. Just one more shot, and then you go down. Right. Well, actually, we've been rejected several times. Yeah, well, I mean, not just today. Yesterday we went way above it. So we've actually hit it multiple times through the month of November. So let's see here. Hold on. Let's see. Let me go pull up a screen. That's roughly close. Yeah, I mean, in multiple times. On 11:30, and then we failed it. Now we're coming back up, and now see, it's like, look at that. It's like we're still going for it. So this is a 1 hour. Yeah, that's a 1 hour chart right there. Let's see here. Hold on. I can resize my window. Actually, do I need to even refresh my screen? So ever since like 11:30, we've hit it multiple times. Right? See that? Haven't been able to hold it. See that? Not at all. Couldn't hold it down. Coming up. got rejected. Well, today was rejected because of obviously FOMC. But we came down, and then we're right there. See what I mean? Very interesting. Okay, so that's the 1 hour. Okay, so see, this is futures. SPY futures. Yeah. The the 5 minute has to continue to just steadily be flat. Just flatten out the curve overnight and into tomorrow morning. See that? The 1 hour on SPY futures is in the negative, actually. So yeah, we've got to flatten out. See that? When I zoom out, I mean, still a higher low, but we've got to flatten out tonight to create that higher low from here compared to where its starting point. That's what it must do. Ooh, look at the 4 hour. Ooh, yeah, you're right. That's the 240-minute 4 hour chart. Yeah. So all eyes on futures tonight, guys. It's got to just flatten out. Definitely don't expect any rally, obviously, but it's just got to flatten out. Interesting. Yeah, we found support right at this level. Wow. Yep, hit it. Got rejected multiple times, in fact. One, two. Actually, oh, we almost got it. Actually, here, let's see. Oh, we touched it. We didn't finally eclipse it until 11:30, right there. 1, 2, 3. 3 times we attempted to go up, and we did, crossed it. So so you think something in the news, huh? Let's skip over the 5 minute. See what you got to say about that. Yeah, see? Slowly coming up, coming up, coming up. Get back to the 0 line and just stay at the 0 line. Just hover flat. Hover flat. All night. Alright, let's check this out. Woohoo! Here, let me look at the MACD instead. Look at that. It is the low on futures is exactly the same as it was last week. Yeah, 12. Oh, sorry, yesterday. Wow. See that? Look at the MACD. Exactly the same. And now it's coming back up. All right, but see, look, that's what I'm talking about. It always, see that? Down, up, zero line, coast, 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 down, up, zero line, coast. That's what you're always going to try to do. That's always the pattern. It starts on the lower time frames first. See that? Down, up, down, down, up, zero line coast. And I think because it did not drop below that negative 20 line, it equaled that one. That's actually still bullish. That's not bearish. Yeah, the wedging formation is what causes you to consolidate. Just, you know, slowly get back. Yeah, it's not, well, it's in the negative for sure. But I think it's going to achieve its objective by getting back to the zero line slowly. Oops. Because this is a lower low than that, but that is not a lower low than that. So that suggests it did find a bottom for now. That's the 1 hour chart. Oh, sorry, that's the 5 minute chart. That's the 5 minute. Let's see what happens. Let me go back. That's the 5 minute. Yep, yep, yep. Oh, I think it's going to go for the 403, 404 range before it gets down to 385. It's 100% going to get back to 385. There's no question about that. It's going to fill that gap. But I don't think 385 is the first destination. It's the second. I think it's going to try to get up to 403, 404 first because you're closer to that one. And the fact that the news didn't crash the markets today, Jay Powell had his chance. Like releasing that hot, forward-looking inflation rate, right at the percentage interest rates. That didn't crash the markets like it did on 11/2, on the last FOMC. So, and the fact that on the hourly chart, you're still close to zero. You're in the negative, but see that? Higher low, higher low, higher low. We need to see where this hourly chart stops. And plus, the negative 20 line is bearish. You start going below that, that's bearish. So, oh, by Christmas? That's 10 days away. Week and a half away. So, I think the more likely scenario is, I think we're going to be actually, by Christmas, we're going to be actually higher. Because the only thing that's going to cause us to crash to 385 is either some black swan event that we don't know about between now and Christmas, or a blow off top FOMO rally. Right? Because, like, for example, today, despite the news, despite all that, we didn't crash. We didn't crash. It's going to take, for us to crash down to 385, major sell-off. It's either black swan or crazy crazy rally that shouldn't be happening. And that's usually what just boom, they just rug pull you like that. But when you're talking about an orderly, you know, like last week, right? It seemed like, oh crap, but no, it found support again and again and again. So it's, see, like this. Here's the big move up. I'm gonna say 420. Yeah, I'm gonna say 420. We left that gap up there on the third week of August on the weekly time frame. Oh, I'm gonna mess up my view. Is this August? No, that's August. Where did we gap? Where was it? I saw it before. Maybe the middle. Let's see, what's the... Oh, I closed that view. Yep. Yeah. I think that's the only thing that's going to cause us to rip it down to 385. It's going to be crazy rally that just fails. Or Black Swan. Black Swan event. Right. Yeah, we're talking about... This is the gap. Here's that gap we're talking about. That's the gap. Right there. But my point is if we do go down there, which we will, we're going to fill that gap one of these days. If we do go down there, oh, we're not coming back up. It's done. I mean, see what I mean? We're not coming back up here. That means it's done. So right. So like on going down, why would we not rally after going down? I just think that we've come all this way. So if we pull back all the way, let's just say, I don't know, all the way down here, there are no longer any reasons after the new year, starting January 1st. Are you assuming that we actually still could rally, even if we go down here before the new year, like before January 1st, that we could potentially go back up? Because I think all the reasons that would cause us to rally are gone in January. So, because originally the reasons to rally to begin with are all mechanical. Number one, they are the share buybacks, Q4 share buybacks. That was in the news. It's like, because that's how executives get compensated, right? Share buybacks. But then also Q4 December is our fund money managers, retirement account managers. Your last chance to get your bonus, you got to hit your mark. And the only way you're going to hit your mark is if you get a rally, right? And initially, it was they thought the Fed was going to pause, when clearly, based on the numbers they released today, that's not going to happen, right? They're not indicating they're going to pause, right? So those three reasons initially were reasons for a rally in December. So 440 is next after 420. So, you know, the bears are going to say, well, you need fundamental reasons, right? Inflation, whatever, labor, economy, GDP, CPI, fundamental. Yeah. Right now, based on even the 1 hour MACD, this is bullish. Remember, that negative 20 line's bearish. And we haven't seen that since, well, let's see, 12.6. Oh, yeah. 12.6, I remember that. But despite today's action, no, we're close to the 0 line. That's not bearish. Now, everything depends on, of course, what happens in futures, of course. Right? It's got to flatten out. It's got to curl. Like it did here to create the higher low. And then in doing that, yeah, see, if you do that, then the 4 hour will flatten and not cross below the signal line. Now, once the 4 hour crosses below the signal line, yeah, that's deuces. That would be deuces. That's deuces. I would agree with that. If the 4 hour does that, yeah, you're going lower. Because here, let's check this out. Here's the VIX. Let's check this out. I wanna now that we've had, look at the 4 hour. Yeah, see? That's what I'm talking about. See? As I was saying yesterday, it's crossed over, and even in light of today's events, it's continuing to cross over. Now it's about to get into the negative. That's what I mean. It's inches away from getting into the negative now on the 4 hour chart. When I did the video last night, it was still like right around here. And as I said, once you cross over on the 4, you're not just going to rocket back up this way. See? And that's the VIX after today. Wow. So the VIX isn't strong after all. It's inches away from going into the 0 line right there. And look at the RSI. That's not looking good. So that's what I'm saying. It's like there's no, right now, the VIX is weak. SPY futures on the 1 hour and 4 hour. Well, the 4 hour, yeah, we need to see how this goes. But the 1 hour, that's a higher low so far. You can sure keep going. It depends on the 5 minute. It depends on the 5 minute. OPEX. Gotcha. Yeah, I'm with you. So, but that's what I mean. Right now, conditions favor the bulls, not the bears. The VIX is weak. See what I mean? It's like, it's weak. The question is, how far down will it go, right? Where's VIX's stopping point? Now that I don't know. Don't know. The VIX as well, and you say bearish. No, I didn't say bearish. I said the VIX is bearish. I said it's inches away. What did I just do? Oh, it's inches away from the 0 line on the 4 hour chart right here. Let me do this. Yeah, there we go. That's bearish for VIX, bullish for SPY. See that? Inches away. You've already crossed over. You're not rocketing back this way. You're going to go into the 0 line. The question is, how far down into the 0 line do you fall? Here's your starting point. That's way down here. Where does VIX stop? Yeah. They're both going above the 0 line. Oh, no, not for VIX. No. Look at that. Look at the 1 hour. That's VIX 1 hour. Look at that. You're curling down below the 0 line on the 1 hour. That's extremely weak. See that? Look at that. Now you're making even lower lows than right here. Yeah, back down to 1920, then bounce. Sure. I can see something like that. Yeah. Okay, look at the VIX. Now that On the 1 hour. This is the 1 hour. That is a lower low than that. And now you're way below zero and you're heading lower. That's bad. Now let's compare that to SPY 1 hour. That is a higher low than that, and you're close to zero, and the 5-minute chart is curling out. Oh no, there's no comparison. There's no comparison. 4-hour chart, it's not. See, oh, remember on the VIX, 4 hours, like, oh no, you're inches away from the zero line, and you've already separated from the signal line. This is the 4-hour chart for SPY. That's and you're way above zero. Here's the zero line. So there's totally different formations. So right now, as it stands right now, the technicals don't support the bears right now. Now, granted, that is coming down, but if the 5-minute chart keeps doing what it's supposed to do, as we saw earlier, right here, yeah, see, go up, as it does, as it's supposed to do. It's going to do that. After a fall, you're going to come up and then coast. So fall, come up, and coast. SPY is actually below. On the 5-minute chart? Yeah, on the 5-minute chart. Right, it's actually below, but where are you, as I've always been saying in my videos, relative to the zero line? It's not that you're just below. It's not a binary, oh, you're below. No, it's where are you relative, and where are you relative to the last low? That's higher than that, is higher than that. Whereas when you look at the VIX, it's the reverse. The VIX looks worse. Look at that. That is lower than that, and you're curling down on the 1-hour chart. And you're way below the zero line. Totally different. Right, as Russell was saying, I think he's right. See, if you want to talk about gaps, yeah, VIX left that gap. You're going to feel that gap. That's what I've been saying also in my videos. You're going to feel that gap. I think that's where you're going. So there's no catalyst to crash the markets. I think the as I said, it's either black swan or just crazy rally, and now you're starting to get negative divergence, bearish divergence on the MACD and RSI. Then you're going to crash it. Oh yeah. Then you're going to crash it. Right. Right. Because, let's see, that's VIX. Okay, look. Look at it relative to the zero line. It's just not the fact that it's negative. It's way below negative. Way down. And it's curling down lower low than its starting point. It's got a lot further to go, that means. It's not done falling. See that? So it's relative to the zero line. You're way below it. You're heading down, making a lower low than right here. That's the 1-hour chart. So if you skip over to SPY 1 hour, which is right there, that's close to zero, making a higher low right here, and that's a higher low right there. And by the way, this negative 20 line that I drew, that's your bearish line. That's like, you start crossing below that, ugh, that's bad. So that's still bullish, provided that the 5-minute chart can continue its upward trend that it's doing right here. See that? It's gotten even closer. It's going to get closer to the zero line, and then it just needs to coast all night, coast all night. And what that does is when it coasts, when it does the coasting all night at the zero line, that forces the 1 hour to flatten out. It's going to just flatten out and then start to curl back up. Hopefully, right here, it's going to cause it to flatten out and then go back up. And then it made a higher low than the previous point, close to the zero line. So it's a very different formation than the VIX. Very different. That's why I say that's still bullish. That's not bearish. Now, on the 1 hour for SPY, you start going below, making lower lows like the VIX is doing. You make a lower low like down here compared to this. Oh, yeah. Now I'm going to say that's bearish. Now I'm going to say that's bearish. So that actually, because yesterday, actually, I was saying that last night's video on the VIX 4 hour, I said, this is it's done. It's weak. It's weak. You've crossed over the 4 hour chart, the 4 hour MACD. You crossed. And last night it was right there. I said, that's it. It's done. And now it's getting worse. And now VIX is about to cross into the negative territory. And I think it's going to stop, whatever. I'll just throw out right. I'll just even give VIX the benefit of the doubt. It'll stop right here, making it a higher low than right there. Something like that. Something like that. Yeah, this. If the SPY looked like this, then I'm going to say, oh yeah, we're going to 385. We're going to 385 for sure. But the SPY has a totally different formation than the VIX. Yeah, see that? Big, and then big wick, and then big red candle down. Yeah, because on the 4 hour, it's nope. It's going to get worse. So yeah, the fact that we didn't crash today. Very interesting. See, that's not bad at all. You're near the zero line. Yeah, you start messing around down here like this, like last week. It was a week and a half ago. Yeah, you start messing around down here. Oh yeah. See, now you're coming around and testing the support line right there, like that. Yeah, like exactly what happened last the 6th, a week and a half ago. Yeah, you start playing around further down here, like the VIX is looking like it's wanting to do. You're going to keep going down. 390 by Friday. 390 by. That's oh yeah, a couple days from now. I don't watch dark pools. I mean, I'm definitely aware of it. That was Mike Jones Investing. He was talking about that he was saying the dark pools was responsible for yesterday's surge and then sell off. I think that's what you're in reference to, DC. Yeah, I think that's what you're asking about. I don't watch it though. I mean, to answer your question, I'm aware of it, but I don't watch it. Yeah, see this bad boy on the 6th. Yeah, the 5th, 2nd through the 6th. Yeah, big sell-off, big sell-off. But we found support at the weekly SMA right there. We found support, but that was after. See, that's a steep fall in the MACD. This bad boy. That's steep. I'm like, ooh, that doesn't. But this line, it found it. I remember doing the video. I said, you on the 1 hour, you must curl up. You must at the -20 line on the 1 hour chart for SPY. You must, or that's it. And that's exactly what it did. Came up, came up, came up. Up, 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 up. Here we are today. Right. Yeah, the dark pools, the smart money. Yep. I mean, it is the smart money that's doing this on the MACD, right? They're the ones who are pumping it. They're the ones who are selling it, right? We're talking billions, right? Billions per day. They're the ones who are doing it, without question. this chart is why it stayed bearish going forward. Cracked open. The MACD cracked open on this chart is why it will stay bearish going forward. Cracked open? What is that in reference to? See, for example, look at this. Right, below the zero line, but where I make the distinction is how far below the zero line and where do you pivot below the zero line relative to your starting point? Higher. Ideally. Like right here, see that? You started down here. Well, actually, you started way down here. But you come up, and then you come back down. Come up, make a higher low. That allows you to rocket back up. Broke open to the downside, mini breath thrust-like manner. But again, it all starts with a 5-minute. Let's see. Oh, it's probably, I think futures market's probably. Yep, it's getting closer. See, it's rinse and repeat. Boom, major fall, up, 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 coast, 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 coast. See, let's see, what is this? 1213. Yeah, 1213. Yeah, 1213. 1214. So that was yesterday. Yeah, 1213. So 1214. Yeah, see, so that's what I mean. 1213, big fall, big fall, big fall, big fall, big fall, big fall. But into 1214, it starts to go back up. That's because on the 5-minute chart, oops. Yeah. 1213, 1213, 1213. Because on the 5-minute chart, see it coasted. It coasted, 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 coasted near the zero line. That's the key. That right here. This range right here is the key. And that's exactly what it's going to try to do. That remains to be seen in futures tonight. That's because they coasted it into the Fed so they can dump it on everyone. Okay, you know, that's fine if you think so, but right now, if this pattern holds, if, I'm not saying it will, if it gets back to the zero line and starts coasting, if it does that right there, what you're going to find tomorrow is exactly what this did. It was falling, but then the MACD on the 5-minute started coming back up and coasted, and then it starts to go back up. And the same thing will happen at some point. I don't know exactly where that level is. It's going to start go back up. Higher low. Higher low. That's bullish. That's bullish when you're making higher lows on the MACD. So let's go back to VIX 1 hour. That's bearish. Lower low than your starting point. That's bearish. Well, okay. So we can do a friendly bet. I think it's the reverse. I think we're going higher. And then because we've gone too high, too far, too fast, then we're going to get ripped. And then I think it's actually going to go even lower than 385. That's what I think it is. Rallied into the Fed. Now sell on the news. I've definitely heard that cliche before. Sure, we can make a friendly bet. I say we rally first and then we crash to even below 385. I think we're going to go below that. I think we're going to go below it. So see, like for example, right here. Here's a great example of the VIX. See this latest gap up that I keep talking about? Guess what? Oh, you didn't just fill the gap. You're down below the gap. That's what I'm talking about. See? Because I've always been saying, no, this is artificial. Too high, too fast, unmerited, not merited. Boom, boom, you're going down. And you're going to go down even further. That's what I mean is it's got to take something like that for us to crash down to 385 again and fill this gap. Well, this is VIX's gap, but pretend that's SPY's gap. It's going to take something like this, like what the VIX did. VIX went kamikaze and went too high, too fast. Boom, boom. And now you're even lower than the gap was. Right? You're even lower than the gap. So yeah. That's what I think it's going to take to get back down 385. I mean, ultimately, I don't think we're going to be able to hold SPY. Here's the weekly. It's 403 now. It's a little bit lower. But, yeah. I don't think we're going to reclaim it, honestly. Ultimately, we're just going to try to make some crazy attempt that's just going to fail. And then we're going to crash and burn. Shorts the VIX like they did before. They don't like volatility. Channel this whole time and unfinished business below is why I'm saying lower before higher. Yeah, we can see who's right. I'm saying higher before lower. So one of us is going to be right. I don't think it's just going to go sideways and then up or down. It's going to try. Which is why it's neutral for now until we have more clues. See, I think right now it's favoring the bulls more slightly favoring the bulls, because on the 1 hour chart, after everything that's happened, you're still pretty much at zero. Pretty much. -1, -1.12. That's pretty much zero, right? My bearish line is -20 and below. Like we almost did that. Oh, it's the last week now. 12.6, right? Yeah, last week. Tuesday. That right there. I remember doing that video that night and I said, you SPY, you have no choice. You must curl up on the 1 hour or that's curtains. That's it. And it did it. See, so yep. And behaving as such, full-on crash in January is way too soon. The sell-off is more like 2023. Sell-off took 3 years to find a bottom. Oh yeah, you're talking about the .com. Yeah, I know what you're talking about. The .com. Yeah, it found the bottom in September of 2000 and was it 3? I think so. 3. Yeah, 3. Yeah. Right. Yep. That's good. Came all the way up there. Zero line is very bearish. Right. But see, it's been able to stay in this range since 11:10. See that? Because it has not gone below the -20 line. Well, except for right here. Right there. It's come close, but it's able to stay in that range. You start going below that, that's it. Sayonara. Sayonara. Like right here. Oh, yeah. Oh, this is before the surge, though. This is when J Powell mic dropped everyone. We went below it. I was like, oh, boy. But it found a way. Come back up. Found a way. It's been staying up here. And see, now that's where we are today. That's why I'm like, I can't say that's bearish. Despite the FOMC and despite J Powell stepping up to the mic again, and he sounded hawkish. He sure did. He had that tone like he had at Jackson Hole. No question about it. No question. But it didn't, what he did today, right here, didn't do to the markets like it did here. That was the last time he, well, actually, no, he spoke over here when it rallied. But the last FOMC, that's what he did that day. He pushed the markets down into the point of, ooh, are you going to now sell off, go even lower? But markets found a way to rebound. You think we get another blow off top? I think that is more likely the case than to go to 385 first. In fact, I think the blow off top will be what causes us to fall down to 385. Right? That's what I think it's going to be. So, yeah, I think it's more likely blow off top first, causing us to go to 385 second. I know James is in the reverse. He thinks it's 385 first, and then we rally up second. Yeah. Yeah, we'll just have to see how this plays out. But right now, the VIX clearly is going down. There is no bullish argument you can make for the VIX right here. Look at that. Look at that. It's now heading lower than, what is this? Oh, Thanksgiving. Week of Thanksgiving. Look at that. It's just down. Like looking down. It's not even trying to curl. So if the VIX is doing that right now, oh, we're not going to crash. The VIX can't crash the markets when it's doing that on the 1 hour. And then on the 4 hour, you're inches away from going into the negative. And what I have seen in every situation, look at the 4 hour chart. Your ending point is almost 100% retracement from your starting point. In this case, it's even worse. But giving VIX the benefit of the doubt, starting point, ending point, starting point, ending point, starting point, ending point. That's where VIX is going. Oh yeah, sure. The one thing to, well, this is my perspective. The one thing that can make us go to 385 is the VIX, and I'm not seeing it at all right now. VIX does not have the horsepower. It does not have the horsepower to make us go to 385. That's why I think, because the VIX is too weak, and here's the 4 hour chart, and here's where I think the ending point is. Somewhere right here. I'm even giving it the benefit of the doubt. This point is just a little bit higher than this point. So, but I think that's where you're going. And in the meantime, while you're going down there, the market rallies. But once you hit that point on the VIX, on the 4 hour chart, and the market's been rallying, getting ahead of itself and getting away from itself, or whatever you want to call it, that's when the VIX says, all right, we're done here. That's a wrap. And then that's when the markets just rip down way past 385. Yeah. VIX daily MACD is about to create the first notch. Daily MACD. And the VIX will take a few days to create a huge bounce. A few days. Okay. Oh, I see what you're saying. There's the old VIX daily. Right. Yeah, I see what you're saying. Yeah, it came up. It's going to come down. Yeah, it's going to take a few. Yeah, it's not fast. Especially when you're talking about the daily. See, the question is, the question is how far is it going to fall? See, none of us know. Up here or here. I don't know. Nobody knows, right? But you're right. I think that wherever it stops, it's going to be higher than this. I'm almost certain of that. Right, but where does it stop? We don't know. But obviously, this is the one day, the daily. You know, so before you get to the daily, you got to look at the 4 hour. Before you look at the 4 hours, you got to look at the 1 hour, right? That's what I mean. So where does all this stop? Don't know. Get there by news. Not by, but by Christmas for sure. You know, see, since I have no idea what that news would be, that's why I can't say one way or another what it's going to be. Some black swan event. It's got to be something big. VIX doesn't react like it used to. Yeah, we'll see. Yeah, no, I don't think so. I don't think the VIX doesn't. The VIX doesn't have it. It's too weak right now. It's too weak, and I think you're going for that gap you left right there. You're headed for it. You already cheated once. You didn't get away with this one. You didn't get away with this gap. You lost it and then some. I think you're going for the second gap. This is 19. This is like 1906. Yep, 1906. So, I think it was TC who was saying 19 to 20 earlier. Probably right. $3.96. You mean 406? It doesn't have to be. Yep. Yeah, I mean. It's right in the middle of the zone. Here's the resistance. Here's the support. Oh, what was this? What's this blue line? Oh, I probably don't need that anymore. I think I just drew that in there for some reason. Probably just to draw. Let me get rid of it. Doesn't mean anything. So yeah, top of the zone, bottom of the zone, weekly SMA. Right there. Smack in the middle. Yeah, we got rejected. Rejected. But I think it's going to wedge. Try it again. Try it again. I think what happened last time in August. Oh, August. Let's go to the 4 hour chart. Yeah, it was August. Let's have a look here. Is this August? Yes. Yes. So yeah, 4 hour chart, August. Dijon after rally short. The piss. Oh, now we got junior anti-black swan event could occur, but I would not bank on it. Yeah, see, I don't know. I'd be flipping a coin if I told you a black swan news is coming in the next 2 weeks. I'd just be guessing. I don't think you want me guessing. So, yeah, we were way above it, but then this is August, by the way, guys. But then we started to see, I'm going to draw this out. Easy to see. That bearish divergence. Even though that was going up, MACD going down. Good night. That's it. So that's the 4-hour. That's the 4-hour SMA. Hold on. Let me chart something. Let me chart this. Weekly. I want to know. I'm curious on the weekly for August. Yeah. Where were you at the peak? What was the EMA? 4190. 4190. Oh. Let me just draw something like this. Okay. That was the weekly at the time, right there, this red line at the time. So it came above it, but ultimately failed. See that? See how, look at that. Yeah, 4190. Notice how it like perfectly, look at that. Look at that. Perfectly come back and kissed it, the 4190 line, the weekly EMA. So it comes up, fails the back test, tries to come back up, can't do it. Here's where the 4-hour EMA perfectly collides with the weekly EMA and says, nope, you're done. And all the while, you have bearish divergence right there. See that right there? Bearish. That's how you, yeah, that's why it failed. Now, when we go all the way to today, right now, do I still have the line drawn? This is not considered bearish divergence because that is higher than that. That is higher than that. It's just convergence. Yeah, I'm looking for something like, yeah. Oh, that's what I'm looking for. We'll just see. I'm not seeing bearish just yet. Black Swan after rally short. So you shorted it today, Dijon? Got some action in there. 394 tomorrow. Let's see here. So 394. Here, let me just. Oh, that's way down there. Right, 410 to 395. You're correct. But, hold on. No. Let's go to this one here. Let's go to 1 hour. That's just easier to look at. Right, 395 down here. So, when you look at the weekly chart last week by natural cycle, here, let me look at here. Look at the weekly right here. Yep. Down, up. Last week was supposed to be down. It's just natural. Up, down to back test the SMA 20. So that when you said what was it, 405? What'd you say? Yeah, 405 to 395. Correct. You're right. It's big swings, but it's a natural downswing to back test this line, and now we're going back up. See what I mean? So right now the momentum is not to go back down. The momentum is back on the upswing because we took all of last week to back test down. Now the momentum is back up, as you see. Look at the MACD on SPY. It's still going up, even though I refreshed it. Oh no. Let me refresh it. Yep. See, it's still, even though funky day today. That is making, this is weekly SPY futures. That is a higher low than that, and that is separating from the signal line, heading towards the zero line. That's what I'm saying. That's not neutral. That's not neutral, and that's not bearish. So last week, I agree, it was the big down week, but we had 2 previous up weeks. So this was a back test week. That's why we had the swing from 405 to 395, as you mentioned correctly earlier. But now we're back on the upswing. So, yeah, down week, down to 395 right there, as you just said. Make a higher low, upswing. So that's why I don't think the momentum says it's going to go down again. If futures holds tonight, it's going to curl right there, curl, flatten out, and then go back up again. That's what I think because that's what the markets always try to do. After you go down like this, down, higher low, well then boom. But the goal is to always go back to the zero line. So it's not in the next week, I don't think, for sure. But here, let me yeah. But boy, yeah, it's not next week for sure. There's no way. I mean, these are 1 week intervals when we're talking about this, like a centimeter. Right. But what I'm saying is, you go another week, and then another week, and then all of a sudden you're in the positive. See what I mean? Yeah, that's about a centimeter ish. So another week, 2 weeks out. That's basically the end of the year. See that? I can see that scenario playing out. 2 weeks rally, almost got to the zero line, and then something wakes up, like the VIX, and then usually that's it. I can see that happening. Chart told you that ahead of time. 410 didn't hold. 410. Hold on. That's the high. 407. Right. Right. Yeah, I see what you're saying. Well, no. 410 didn't hold because this is the weekly EMA that for all of 2022, the markets have failed to hold. So it's not a bearish sign. It's just that you have been rallying for 2 weeks consecutively, and you actually went up above it, but it's like, it's not your time. It's not your time. You do need to come back and backtest, which you did. Big old fat red candle right there. But you also held the weekly SMA 20. And now it's your time to come back up on the upswing. That's so I agree 410 didn't hold, yes. But it's only because, well, that if 410 holds, well, now it's actually it's not so much 410, it's the weekly EMA is currently 404. Yeah, 404. If it finally holds, like if it comes up, successfully backtests off 404, and then it starts going up again, that is a trend change on this bear market. I think, to me, if it can do it, which I don't think it can, honestly, what it's going to do is it's going to rally past it like it's done already 2 weeks ago, and like it did like yesterday. It's going to blast past it only to dump down again. So I think we're going to blast past it, but we're going to fail the back test. Because if you can succeed on the back test, which, by the way, you have not been able to do all of 2022, period, hands down, you fail the back test every time. But the day you fail, or you succeed on the back test on the weekly EMA 50, which is currently at 404, that is the beginning of the end of the bear market. That, to me, is a trend change. You have a trend change. Yeah, so yeah, yesterday that huge gap up, and then we just fell down. But that was because let me see here. Yeah, yesterday. Yeah, this one yesterday. Right. But yesterday was to get us back into this trading range. Here's the weekly EMA, sorry. See, we're in this range again. We're back in the range. Yesterday was to get back into this range. So blast way above it, fall down, but then get back into the range. Now we're at the bottom. Oh yeah, the bottom of the range. Yeah, see, it's flat. Futures, that's extended hours right now. Flat. But that's what you need to do. Ah, see? Here we go. Up to the zero line. That's what I mean. Get back to the zero line and coast. Just coast. And you do that all night. Now the hourly starts to flatten out, and then it's going to want to start to curl up. The longer the MACD on the 5 minute stays at that zero line, or even goes above it. That's what I mean. That's how it regains its momentum. Oh, all right. Yeah, cool. So yeah, no, it's good. Thanks for staying around like all afternoon. It was a good conversation. All right. I should probably go too. I've been doing this since 1 o'clock. So you guys, thanks for joining. It was lively, kind of interesting, right? So appreciate you guys joining and contributing to the conversation. It's always fun taking bets on how all this is going to play out. But okay, I'll go ahead and wrap up the live stream. Once again, appreciate you guys joining, and giving a lot of comments and questions and that sort of thing. And we didn't crash. We're going to see what's going to happen the next couple of days. So yeah, no, thank you guys for spending time this afternoon. Much appreciated. So yeah, we did not crash. Yeah, we're right there. We're still in the middle of the range. Right there. We're right there. That's a 1 hour chart. There's the weekly. It's right there. There's the weekly. Oh hey, Marilyn. I'm still watching, but not contributing yet. Well, we've only started this live stream for like 3 hours now, so I'm not sure when yet is coming. Not sure when you joined us though, since my live chat view is kind of funny. Participants is like, all I see is like, yeah, that's it. But I saw even less than that earlier. I don't know, whatever. So you probably heard the conversations between me and Mr. Bond, right? We got a little friendly bet. He thinks it's going to go down to 385 first and then rally. I think we're going to have blow off top, and then we're going to crash to below 385 second. I think we're going to go back down there for sure. Okay, watching the whole time. Yeah, we're going to go back down there for sure. That's where I do agree with him, but I don't think it's just yet. I think the MACD, see that's not bearish to me. That's not bearish. So Not yet. We're gonna mess around with this the weekly EMA level that has eluded the markets all year long. We're gonna mess around up here first for a little while. Yeah, and then we're going down. So, because I think Jay Powell today was his last chance to crash it, right? And I don't know. I said this a long time ago, way earlier in the live stream. I said I don't think the markets believe him. I don't think. That's what I think. I was like, well, we're calling your bluff. We don't believe you. So that's why they didn't crash today. They're like, yeah, you could put out those numbers where you think the 1 year, 2 year, 3 year interest rates, right, or inflation rate's going to be. That's fine. Yeah, the interest rate, terminal interest rates after 3 years. But that doesn't mean the markets have to believe it. And that's what I think. We didn't crash. They don't believe it yet. So, yeah. Yep, you're living in the cave. That's right. That's right. So, but yeah. Maybe, so you probably, if you're listening or even watching passively, you probably saw me showing the VIX. Like, whoa, that looks weak. To me, it does. The 4 hour, clearly crossed over, and now it's about to get into the negative. The 1 hour making lower lows, then that's really weak. So, yep, rallies and holds. TC, so that's what you think? Is replay available? Oh yeah, sure, Corn Cob. It will be. Since this is like a 3 hour session, though, it's gonna take a while for YouTube to probably process it. But yeah, it will be. Yep. You can just go to my channel, and then there's a section for live, and it will show up there. Yep. So, yeah, hope you guys got something out of it today. That was interesting. It was, yeah, people in general believe what they want to believe. Yes, I see that VIX. Yeah, you saw the 4 hour and the 1 hour. The 1 hour is ugly. Yeah. Yeah, that was ugly. To me, that's bearish. The 1 hour. 4 hour aside. Look at this. Look at that. It's curling down. It's not even trying to flatten out. It's curling down lower than that. See what I mean? That's what I was saying in my videos. You guys, you're going back to fill this gap that you left. You cheated. See, this is what I mean. Here's that blow off top example. The VIX, you gapped up, went overextended, and now you're even lower now than where you gapped from. That's what I think is going to happen to the markets. I think we're gonna try to mess around with that weekly EMA. We might even blow past it. Something's going to happen, and then it's all going to come down. So, that's what I think. Similar to this, it's going to be, so that's the 1 hour on the VIX. That's not good. See, this formation on the VIX is bullish for the markets. I think it was TC or Russell who said earlier he thinks it's going back down to 19, which he's probably right. This 19 is exactly where it gapped up from. It gapped up from 1906, if I remember. Yeah. I think we're going to go back down here and fill the gap. But then VIX is going to kind of hover around here for a little while, and then it's going to spring it on the markets. And that's when it's going to get ugly. So yeah, we all have different perspectives about it. But interesting. So, I don't know, just thinking about. So we didn't crash, obviously, right? We didn't crash. Sold off, found support, now we're coming back up. For this rally to continue, though, Oh, I see. I got you. Yep. 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 Oh, Mavericks. Yeah. Yeah, with you. So yeah, well, as you know, if you're on Mavericks channel, he's fundamental. I'm definitely mechanical, technical. I don't make fundamental arguments. He's got that one. I won't even try to debate on that because fundamentally, actually, he's right. Fundamentally, he's right. So, see, look at this, guys. I mean, we're still on the channel. Here's this resistance. Here's the support. Weekly EMA, weekly SMA. Come up, touched it twice, once, twice. Back test. Making a higher low so far. And, you know, you probably heard the discussion earlier about the MACD on the 5 minute. It's trying to come back up to the 0 line, and then it's expected to coast at the 0 line, which will flatten out this 1 hour chart, which will flatten out the 1 hour MACD, making this a higher low than that, so that it has the energy. Once it creates that flatten out and makes a higher low, it has the energy to try to go for that weekly EMA at 40. Well, this says 404, but now it's actually 403. It's going to try to do it again. This is like the third time, you know, in the last month. So, yeah, that's what I think it's going to do. And right now the data is pointing that direction, right? That's why I'm like, oh, we're not going to crash down to 385. I don't think so. You know, we can have a difference of opinion on that one. Nothing in the data suggests we're going to go down to 385 anytime soon, especially when the VIX is so weak like that. Yes. Okay. You got me on whatever I just said. So, yeah. Yeah, the main thing, as I was discussing with Bond, was it's not the fact that it's in the negative. It's where is it relative to the 0 line. That's the most important. Not the fact that it is negative. It's where are you relative to the 0 line. And as I have drawn here, the negative 20 line on the 1 hour chart for SPY futures, that's your drop dead line. You cannot fall through that line, or it is decidedly bearish. Decidedly. It's like this was last week, last Tuesday on 12/6. It went below it, and I did the video that night. I said, you have to curl up. You cannot continue to go down, or it's done. See, and you notice that? You notice that? It was right at the support line, right? So it did curl up, luckily. It curled up, and made higher lows right here. See the higher low, higher low. So, you know, and that was last week when it was ugly. Everyone thought, oh no, we're going to crash. But despite today, see, it's right there. That's not anywhere close to the negative 20 line. You're closer to the 0 line on the 1 hour chart. So I just say stay tuned. I don't think we're going to find that 385. Doing a live tomorrow morning. Oh, well, I guess are you awake at that hour? That's well, that would be, well, with Central Time, so it's 8:30 at opening. I guess I could. You mean at opening bell? Is that what you're asking about? Opening bell. I hadn't I thought about it. Yeah. Futures tonight will be telling. Futures and pre-markets tomorrow morning. We need to see where this is going to land. But as of right now, let me just show you guys in case you guys missed it. See, look at that. Look at that. Here, let me here, zoom out. See that? Okay, this is last week when it got ugly. See that? Today. That low on the MACD today matches last week's low. Exactly. That's not a coincidence. So it's doing the exact same pattern. See, up, so down and up, down and up. I expect it to get to the 0 line and coast. And when you do that long enough all night and all morning, the 1 hour starts to flatten out. It's going to start to flatten out right there. It's going to start to flatten out right there, creating a higher low than right there. And that's a higher low than right there. See what I mean? That's not bearish yet. That's not bearish at all, right? At some point after the market gets through their thick heads, I wonder what will happen if the market keeps pushing him back against Powell. Yeah, I mean, so I had some calls in currently. I think tomorrow morning should be good. Right? Calls. Right. There's Central Time, not necessarily. So looking at Maryland's question, you know, he keeps pushing back against Powell. Good to be able to prop up the markets through the recession. Oh, I don't think so. No. Honestly, I think starting like January 1st, if we do get a rally in January timeframe, that's when it's all going to come down. So, yeah, I think that's when it's all going to come down. You know, so yeah, see, when you look at this formation, so this is CPI yesterday. I know Mav did a video. His thumbnail was like CPI pie in the face or something like that. So I saw that. But see, that's what I mean. It's like these are bullish configurations. See that? Before the surge up, it made a higher low than here, and it already separated from the signal line, the green signal line. Before CPI came out, guys. CPI came out right here. Right here. See? So the MACD was already going up. Up, up, up. And as it looks right now, if the trend holds, it's gonna make a higher low than even 2 days ago's low. See what I mean? So, oh, something fun. Looks like Marilyn's laughing at me, laughing at something I said, maybe. So, I mean, yeah, watching that VIX. Yeah, sure, Brad. How's it going? I've seen your couple of comments before. But no, I mean, you guys, boy, the EMA, whether you're talking about weekly, 65-minute, 240, boy, it's no accident, right? Time and time again. No laughing at the markets. Oh, sure. Well, to answer your question, Marilyn, when you said, yeah, what if the market keeps pushing back? Okay, this is what, here's, let me just show you. Let me go to the 4 hour. Yeah, the 4 hour is better. SPY. Let's go back to August. When that bad boy peaked. Right here. This is August 16 is the peak. This is what I'm looking for when I know the markets have pushed back too much and they're about to get rug pulled. I'm looking for this. Bearish divergence on the MACD. This is the 4 hour. The 1 hour most definitely shows that too, but I want to make it obviously clear. See, but you can sail, okay, 8-1 to 8-15. That's 2 weeks. Here we are 2 weeks out from the end of the year. That's what I mean. The markets can continue to just be irrational, right? That's just human emotion. It can. Even though it's like, what are you doing? You shouldn't be going up. But we're going to start seeing divergences. And that's when, it's like, it's time to get out. That's when the markets have pushed it too far. And then that's when you can expect VIX to retake the mantle. And, yeah. You see what I mean? Yeah. But as of right now, as I was getting in a nice friendly debate with James, Mr. James Bond, we're not there yet on having a bearish view of SPY. See, like right now, this is the 4-hour. It is coming down, but it ain't over until you cross over the signal line. Now it's over. 100% I agree, because there is no scenario where especially on the 4-hour time frame, you cross over, you are not crossing back over. Crossing back to the positive, you're not going to do it. You're not going to do it. Okay? No way. Because this line, that's a 4-hour time frame, it's too smooth. Right? It's not like a 5-minute chart. Oh, 5 minutes, I could do it like 10 minutes from now. No way. No way. So, it's not over yet. It's not over yet. Because the 1 hour is still close to the 0 line. Right? It's still making a higher low as of this time. And the 5-minute is doing that. It's getting back to the 0 line, and it wants to coast. That will allow the 1 hour to flatten out, and then that allows the 4-hour to kind of stop. Its decline right there. It's going to do it. You're getting close to a point where you have to do it, or otherwise you're going down. But as I was showing you with the VIX, let's take a look at the 4-hour. Oops. Look at that, guys. That's like, oh no. That's the 4-hour on the VIX. You're inches away from the 0 line. When you start crossing below that 0 line on the 4-hour, you're going to fall big time. Right? Now you're in the negative. You're still falling, but you're in the positive. Yeah. That's what I was trying to, convince Mr. Bond. But we still have a difference of opinion. That's fine. But because I said, if the market's going to crash to 385, if that's going to happen, it has to be because of the VIX, right? I mean, that's it. That's it. But I will say, not like this is going to do it. The markets will not crash when the VIX is in this formation pattern. No way. Because I also pointed out, when we're talking about the 4-hour chart, if you notice on the 4-hour chart, here's your beginning of the upside. It almost always retraces 100% to where you started. At least 90%, right? Up, here's the beginning of the up. Down. Up, okay, that's worse. But let's just give VIX the benefit of the doubt. Up, up, down, up, down, up, way down. Okay, that's fine. Up, down. See what I'm saying? You're going to retrace almost 100%. Up, down. So you did even worse. Up, down. So, I'll just get rid of that. Guess where you're going to go to, VIX? You have to go somewhere down here. Because that's just what history says. Up, down, right? You have to up, down, up, down, up, down. So you ended up almost at the same spot. Yeah, see? That's why I'm saying the VIX looks weak. I was saying that in my previous videos last night. And here's what I'm talking about. That's like, no, you're not gonna rebound. I'm sorry. That's just not the nature of this 4-hour chart. You're not gonna do this and then tomorrow you're gonna do that. No. No way. Not when you have a huge wick and then a huge red candle, right? This is today. So, yeah. This is the 4-hour chart. The 1-hour chart that I just showed you, that's even worse. Look at that. That's even worse. Look at that. It's down. It's pointing down. It's not even trying to curl. And you're already below right here. Well, you're pretty much at this low right there. 11/22, week of Thanksgiving. Oh, you're going lower. You're going lower, VIX. You're not going to stop right there. So, yeah. It's not just going to pop back. That's not how it works, right? It's not how it works. On the 1-hour chart that you're looking at, you have to do something like this to stop it. You have to like come down, 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 up, but only to come down again. But at least you stopped it. You see what I mean? You got to have that like this. Down, 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 up, make a higher low. Now you stopped it. You're not even close to doing something like that right now. See what I mean? That's why I'm thinking, no, we're not gonna. This is just difference of opinion right now. So James thinks we're gonna go possibly by Friday, 2 days from now. We're gonna go down to 385 SPY. I'm like, no way. What would cause us to go down to 385? It ain't the VIX. No way. You know what I mean? No way. Right. It's not even trying to go up. It's like you're still falling. You're not even trying. So that's what I said in my previous videos. You gapped up twice, here and here. How'd this gap up here end out for you? Now you're below where you gapped up. See that? You're ultimately going to go down here and fill this gap. And it's going to be somewhere down here where you're going to try to stop. How and when you get down there, I don't know. I don't know. I don't know that. But I think that's where you're going. And based on where I see on the MACD 1 hour, oh yeah, you're going down there. And so that's why I said, it's like, God, this doesn't look, despite what happened today, you know, despite what happened today, this is a 4 hour chart. Let's go to the 1 hour. With SPY, Jay Powell, the Fed, for the forward interest rate, expectations. That's right there. That's the MACD. It's at -2 right now. That's close to the 0 line, guys. That's not that bad, right? That is still higher than that. It's still higher than that. That's what I mean. So, and with the VIX looking like it is, it's not going to stop the markets anytime soon. I think the markets are going to try one more time. Boom. It's going to try it. It's like it did here. I think the more likely scenario is going to play out is, well, we're going to keep doing something crazy. I don't know exactly how that's going to play out. We're going to do something crazy, like come up way up here, and then something's going to get out of hand. We're going to get some divergences, and we're going to not only lose this line, but we're going to go all the way down past 385 and not just fill that gap. We're going to go even lower than that. That's what I think is more likely to happen. So, right, because we're too close to this weekly EMA now. We're too close. We're right there. We're too close to just say, oh, you know what? Hey, how about we take a detour down to 385 first, and then we try to come back up and break it. That's too much. That's too much energy. So, but if the VIX were like in position to like almost want to surge or be close to its 0 line, okay, I could probably get on board with that. I can get on board with that. Like, yeah, I could see it going down to 385 because the VIX is like ready to roll, but not in the current configuration. VIX is nowhere near ready to explode. And where's the June? Oh, June low was well, let's see here. That's October. Ooh, I think that's like almost at the end of my data. 6 there it is, yeah. 616. Low 365. 365. Just rounding it. Yeah, 365. Yeah, see, way down. Here's the June low, below the -20 line. Oh, that was ugly. Below the -20 line. Way below the 0 line. See that right there? So when you compare that to, here's the June low, way below the -20. Well, not way below the -20, but way below the 0 line. Let's fast forward to the October 13th low. Right here. Oops. Right here. Oops. So actually, see, it almost hit the -20 line again on October 9th, but by October 13th, it was almost back up at the 0 line. That's when it just rocketed up. Okay, so So we fast forward to today. That's where we are today. See what I mean? I'm like, that's not bearish. That's not bearish. So then comes inflation round 2. You know, not far off from 380. Oh, not far off from 385. You're talking about the low. The low for October. So, yep. So there you have it. I mean, oh, okay. Right. Yep. Let's see here. Right. Not far off. 360 and some change. Yeah, he's talking about right here. This gap we left right there. This is the gap he's talking about. Which I agree, we are going to fill that gap. I agree. But where we disagree, where we have a difference of opinion is, well, when do we do it? He thinks we're going down there first. I said, no, we're going to go up first, and then we're going to go down second. So, to reverse suddenly. Right. That's why you saw the jobs report a couple weeks back was still like high. You know what I mean? There's still money in the environment. You know what I mean? That's why it seems like inflation slowly coming down, but it's still elevated. So yeah. Yep. Here's where he's talking about right there. Big gap up. Big time. He's right, because it happened in pre-markets. So, see, okay, let me give you an example. Like, it was a couple days ago, right? 13th. Oh, it was yesterday. Wow. Getting all my days mixed up. So, here's an example of just crazy blow off top, causing you to just rocket back down. You see what I mean? We need something like that to go down back down there. We need something like that. We're not just gonna go down there, right? We're just not gonna do it, because when you look at the MACD, it's not, except with the exception of last week. Last week when it got ugly, when everyone thought we were gonna crash, with the exception of last week, we haven't really touched that negative 20 line, like, except the 11.3. So it's been over a month. That was when Jay Powell mic dropped everyone. FOMC 11.2. Yeah. 11.2. 11.2 to 11.3. Mic dropped everybody. See, so what's gonna cause us to lose the MACD? That's really the ultimate question. Right now, it ain't the VIX, right? It's not the VIX. What is it? It's got to be some black swan event that nobody sees coming. Yeah, counting people who are working multiple. Oh, yeah. Right. They're not counting unique people. They're counting, I've got 2 or 3 jobs. Right. See? So, he did that again today. Who's he? You talking about Jay Powell? I kind of, like, since I was doing the live stream, I didn't listen too closely. I kind of caught the gist of what he was saying, but I didn't listen word for word what he was saying, because I was doing the live stream at the same time. So, but you guys see what I'm saying? It's like, this range that we've been in for the last month, what's going to happen to make us lose that momentum? Right? If Jay Powell had his chance today, and that's all he can do, well, the market still got a shot. See what I mean? It's not. Yeah, the mic drop. He did that again today. Yeah. You know, he was definitely negative. He was definitely hawkish. Now that I heard, you know, even though I didn't hear word for word, I could hear his tone. He was like, ooh. Yeah, I could hear it. Right. Forceful and decisive. No ambiguity. Yep. Yeah, I agree with that. Yeah, oh yeah. He was giving very specific examples You know, I don't remember what they were, but yeah, he was. No question about it. So, yeah, there's no question. But see, as I pointed this out to Bond, I said, okay, here you go. Here's the FOMC mic drop, 11.2. Markets did this, that, on the last FOMC. Okay, that I'm not going to debate that. That's bearish. If I saw that, and here's the negative 20 line, oh no, right? But again, let's contrast that to today's FOMC. You know, should have done 75. I think if he was serious about it, sure. But apparently, right. So I don't know if you heard me say earlier, this way earlier, even like as Jay Powell was even in the first 10 minutes of talking, I'm just thinking now, are the markets no longer believing what he is saying? Are they calling his bluff, saying, okay, you can put out these numbers like what you did today, right? The 1 year, 2 year, 3 year expected interest rate. But you could put out these numbers, but we don't think you're ever going to get there. You see what I mean? I think, is that the question now, the markets, that we should be asking? Are the markets now saying, we're going to call your bluff? You know? So, you know, that's just a question. I don't know. I don't have an answer to that. Oh, yeah. The elites and the algorithms. That's all it is. He's acquiesced to 0.5. 50. Sure. Sure. Because maybe you guys know, do they have to vote, right? Does it have to be unanimous, or can Powell just override? Say, no, this is what we're going to do. It's just more symbolic that you guys are a part of it. I think he can override, right? I don't know. Not sure. So, yeah. And the dollar didn't do anything today. See, I refreshed. I'm like, yeah. See, check this out. This is the dollar 1 hour. Okay, so it is trying to go up a little bit, but it didn't rock it. You know what I mean? You didn't. Yeah, see? Look at the 4 hour. See that? Despite, releasing the numbers of the 1, 2, and 3 year projected interest rates, dollar didn't do anything, because look at the 4 hour. Look at that. Look at that separation. Look at it below the zero line. You're not reversing course. No. See that? Let me get rid of. Look at the RSI. That's even worse. That's even uglier. So, yeah. See, the dollar's going down. Yeah, what money pool are the algos linked to? Yep. Yeah, see if you can figure that out for us, TC. Figure out what money pool they're linked to. But see, okay, but here's my thought. That's why I love the MACD. I think whether you talk about the dark money pool or whatever pool, billionaires, their intentions manifest themselves in the MACD. And let me show you an example. Zoom out. 11, 10. Oh, this is dollar. I thought I was back on SPY. Zoom out. Mic drop. Let's go to the mic drop. Here we go. Here's the 11 It was this day, right here. Right here. Right there. Okay. 1 hour MACD. SPY. Now, look closely. See this huge wick up? This is when markets surged. When at 2 p.m., you know, when they released the number, right? But that was before J. Powell spoke. Markets surged. Right there. Right? Look down here on the MACD. Here, let me go down here. Right here. Look to the left of my cursor. MACD was already going down before the 2 p.m. number even came out. Before the 2 p.m. number came out and the market surged. My point is, the MACD already told you what the markets were going to do. And the markets did exactly that. The algorithms pumped it at 2 p.m. But the MACD all along said, you guys might want to back out, but you might want to get out of this. Okay? So let's fast forward that to today's. So this is 11/2 FOMC. Let's go to 12/14. Today's FOMC. It was a totally different look today. In fact, the MACD was going up and up and up. And now that I'm thinking about this, I'm thinking it went up and up and up. It actually crossed, you see that? There's no debating it. It crossed the signal line. Because I think perhaps the markets already knew something was going to happen. They knew it was going to be a dump, so they wanted to go up so that when it dumps, it won't be so far down to finish at a higher low than here. So it's a totally different configuration than last FOMC. So that's why I came into this FOMC thinking, oh, this is bullish. This is bullish. So it's the MACD knows, because all that dark pool money that TC's talking about, whatever money, all the options money, dark pool money, any money, billions and billions and billions of dollars, when those orders are placed, the MACD now reflects those trades. You see what I mean? It reflects those trades. That's what I'm saying. Yeah, it reflects it. And the markets can't hide it. It's like, well, you see what I mean? You can't hide it. You know? So, yeah. It's all part of a plan. Ultimately, I look at this MACD as this is making a higher low than that. And that is a higher low than that. See what I mean? It's all part of some kind of scheme that I believe, for example, look at the VIX. I've been saying this for over a week now. I said something's not right with the VIX. The VIX looks weak. The VIX looks weak. The VIX looks weak. This is the 1 hour chart. Let's go to the 4 hour. All these gap ups. I was like, nah, it's weak. And what do we have? Finally, it just collapses on itself. And here's my theory on what they were doing with the VIX. They knew, or they have planned for the market to rally. But surely you can't, right here's the 19 level. You can't drop the VIX down below 19 and get to like 17 and 16. That's stupid. That's crazy, right? So what you have to do is you have to gap up, pump it, gap up, pump it, knowing, oh, it's going to come down like it is now. But by the time you come back down, you've bought time at 8 time off the clock. You're back down to the 19 level. See? So that's exactly what they've been doing. That's, so, yeah. So anyways, give me like 5 minutes. I have to do something for my son. So it might be like 5 to 10 minutes. So I'll be back. All right, hold on a second. Maybe I'll play some music in a minute. Play some music. Hold on. Okay. You guys still there? Hanging around, hanging out? Who's sending me a text? Let's see here. Okay. This is going to be one long live stream, I'll tell you that. Don't know who all's left on the channel. Let's see here. Yep. We're all squared away there. Yeah, I don't know who all's left on the channel in the live stream, but so yeah. Yep. But hopefully I answered your question about. Yeah, I mean I'll probably be hanging out for a little bit and then I'll go ahead and take off since I've been doing this since 1 p.m. Central Time. That's one long live stream. Oh really? Everybody else took off already? Okay. No problem. So, yeah, I think mysteriously, so what was I going to say? Okay. Here's the 1 hour chart. SPY. Yep. So, okay. Yeah, CPI yesterday. Yeah, see what the MACD was already doing before CPI came out right here. That was CPI right there. It was already doing that before CPI came out. So that's why I'm like, you guys, market makers, you already made the pivot, made the higher low here. You already started curling up. You already knew what the answer was. Already knew what the answer was, right? That's This is CPI. This is CPI yesterday. Check this out. CPI on 11/10. Look at this. This is CPI surge. Market's already coming. This is a 1 hour chart. Yep. Market's already coming up, separating from the signal line. Surge. And by the way, that is a higher low than that. See that? That was CPI at 11/10. That's CPI yesterday. And then let's go to a month earlier than that. 10/13 CPI. What was the markets up to on the MACD? Up, close to the zero line. Hot CPI. Hot CPI. Remember that? Markets were down 500 points in pre-markets. Dow. Didn't matter. It was already coming up to zero line. Kaboom. See? They already knew. The market algorithms do more than we know, or do they control it? Oh yeah, you bet they do. Absolutely they do. Absolutely. This is the market makers and their algorithms are at the bidding of the billionaires, the fat cats. Absolutely. 100%. They are at the beck and call of the billionaires. But what I believe time and time again, the MACD reveals their hand. And that's why I'm like, whoa, that's bullish. Right? Coming up right before the rate hike. I was like, whoa. So you mean a sinking feeling that the game is rigged? Well, of course it's rigged. So, we'll have to see. I mean, it's 5:13 now. Let me click refresh and go to the. See, futures are up. See, 6:03 p.m. Eastern Time. Futures are slightly up. And why is that? Let's go. This is the nice discussion I had with Mr. James. Because futures are trying to get back to the zero line like it did yesterday. Back up to the zero line and coast. Back up to the zero line, and it's got to try to get to the zero line, and then it's going to try to coast. That's what it's trying to do. Basically reset itself on the MACD. Reset. Yep, rigged. How do you combat that? How do you combat? I think you combat it by, it's essential you have to use the MACD 1 hour and 4 hour charts to see what they're up to. Does that make sense? I think that's what we have to do. They don't want to let it go. Yeah, sure. I mean, that's their money, you know. But yeah, that's interesting. Up and then down. We'll see. We'll see. Well, I want to see where this flattens out tonight. Here, let's look at the 1 minute chart here. Yeah, see? There's a 1 minute chart. 2:45, where's 4 o'clock? 4 o'clock, right there. Yeah, it's pretty much at the zero line. So, oh yeah, I trade options. I don't trade stocks though. I trade only options. Calls and puts for me. Day trade TQQQ. I'll do calls and puts on TQQQ. Because of its volatility, I love it. I love those high volatile triple leveraged ETFs. So, but whether it's options or stocks, it doesn't matter. The analysis is still the same for both. So, yep. So, yeah, there you have it. You trade options? Or you just into stocks and ETFs? Will you ever signal TQQ day? Signal? Oh, you mean like tweet? You like? Yeah, I like the rush. Oh, you're just watching. You're not actually trading. Gotcha. Yeah, I mean, I can definitely signal TQQQ day trades like on Twitter. Yeah, I could do something like that, sure. That's probably the fastest. What's my trades? Sure, yeah. Man, it was. Yeah, you can make good money with TQQQ options. Yep, it's not over yet though. Interesting. So, yeah, it's. CPA tax prep stuff. Yeah, learning, but you're not trading yet. Oh, there's a lot to learn. A lot to learn. But once you have a certain scheme in place, you know, and you stick to it, you have certain rules. Yeah, it can work out for you. That's intended. Oh, gotcha. Yeah, Junior's been watching a lot of my older videos, placing trades and whatnot. So, yeah, I mean, probably too much to explain in a 5-minute conversation or something, but there are my older videos. Actually, I have, let me see. Do I have? Yeah. This is long. Like, these are like my first 5 videos that I did here. Hold on. Okay. Why are you doing that? Yeah, if you want to learn how to trade, like intraday stuff, check out these 2 videos. Yeah, I did it. It's been over a month now. Maybe 3 months ago, something like. Oh, wait a second. No, 10/24. 2 months ago. Yeah. Boy, it can be a wild ride. A wild ride. So, yeah, check that out if you want to learn more and ask some questions, you know. But, I mean, what do you think, Junior, based on what you saw today? Boy, I don't think we're gonna be crashing anytime soon. That's not a bearish. It's a setback, but it's not. Boy, I don't think that's bearish just yet. Not yet. I mean, we'll have to see what's up with futures and stuff tonight, but. I think if Jay Powell was going to crash it, today was the day. Just like he mic dropped everyone on 11-2. Oh, he crashed it all right then. But he didn't do it today. So, yeah. 408. Ooh. 408's pretty high. I mean, we're definitely not. We are not out of the running whatsoever, despite everything that happened today. Yeah, 1 hour MACD. Yep, not at all. They want their Santa rally. That's what I'm thinking. I'm thinking despite everything that happened today with FOMC, we didn't crash. In fact, we can even argue you just made a higher low right there. See that? You made a higher low. But we need to see some follow through tomorrow, right? Starts on the 5 minutes chart. I mean, the MACD's gotta, you gotta make your way back to 0. You need to coast like this, like what it did here, up, and then you gotta coast. Rinse and repeat. So that, yep, 1 hour. No one's gonna stop them. Santa rally. Something else, I'll tell you. Something else. Right, when you coast on the 1 minute, well, let's just go 5 minute. Zoom out. See how we had this big surge and then big fall yesterday. Got to come up and you got to coast at the 0 line. At the 0 line. You can't be coasting down here. Right? you have to get back to the zero line and coast and coast, and that builds momentum back again for you to go up. That's what it does. So when you're coasting like this on the 5 minute chart, when you skip over to the 1 minute chart, when you're coasting, that allows the 1 hour to not only flatten out but start to curl back up. And that's when you really start to have momentum, when the 1 hour chart starts to get the MACD red line starts to cross over the signal line, because the 5 minute chart was doing a lot of coasting at the zero line. So, all right, yeah, good night, Junior. Have a good one. Yep, Maryland, that's how it works. Yeah, have a good one, Junior. Thanks for joining today. Interesting day. We didn't crash. So we didn't crash. Yep. Yeah. See, this is how all this stuff works. So it's like we're building momentum in the last couple days, and then today, boom, crash down. But it's a higher low than that. See? That's why it's like, this is not over with. This is not over. And on the hourly, that's close to the zero line still. Yep. So, but yeah, no, I'll probably go ahead and jump also. Been on for a long time now. I got to take a break. Got to take a break as well. So, well, thanks for joining, and talk to you again on a future video that I record. I probably won't do one tonight. That's just too much. I've been on all day already. So, okay. Well, we'll go ahead and adjourn today's live stream. Big long session. Okay, well, have a good night, and yeah, thanks. I'm still learning a lot of stuff too. Yeah, thanks, TC. No problem. It's been fun. I think the rally's still alive. It's not over. It's not over. So, it's not over. All right, guys. All right. We will talk to you again later.